Good morning, ladies and gentlemen. Very pleased to welcome you to the New York Fed's 2024 Culture Conference. My name is Jim Hennessy, and I head the New York Fed's Governance and Culture Reform Initiative. And I just have to say, I've been here at the bank for more than 30 years. This is the first time I have ever seen these curtains open. And so it's truly a new era here, I think. But back to business. This year does mark a very special moment for our initiative. We kicked off the effort with our first Culture Conference 10 years ago. And many of you were there that day, and some of our speakers that we'll have today were also there. So thank you for your ongoing interest in and support of the initiative. We'll use today's conference in part to reflect on the past decade and consider how culture in financial services has evolved during that period, what's changed, what hasn't, and where we're headed. Leading us in that discussion this morning will be our own President, John Williams. Later in the day, New York State Department of Financial Services Senior Deputy Superintendent Ray Dorado. And then finally, we'll hear from Morgan Stanley's Executive Chairman, James Gorman. In addition to broad questions about where the industry stands with respect to culture and behavior, we're going to have three panels delving into more specific topics related to accountability, the relationship between technology and culture, and building cultures of imagination and integrity. To help us navigate these topics, we've got a unique group of experts, including a super forecaster, a forensic accountant, a banker turned organizational psychologist, and a former prosecutor, among others. We're also going to hold a short workshop around lunch, which we hope will help convert some of the ideas that are presented today into concrete and try to transform those into concrete change. We also want to ask your help by participating in a few quick polls throughout the day. Your answers are going to help us understand the state of the industry, as well as help us with our future programming. So you'll see behind me on the screen and on the printed programs a QR code. I'd ask you now to please take out your phones and navigate to our first question. All of your answers are going to be anonymous. We want to know your honest opinion about where things stand. And we'll share your responses after the first break. So let me just pause now while people take care of the first question. So we'll come back to see where the final results are a little bit later. But for now, let me just review a few logistics for the day. Both of our breaks today will take place just outside the auditorium where breakfast was available. Lunch is going to take place in the Liberty Room down on the first floor, and bank staff will be on hand to direct you to the elevators for lunch. If you need any assistance during the day, look for any of our staff, and they'll be wearing black tags on their ID badges, and they can give you help. Login information for the Wi-Fi is on the screen behind me and is also on the signs outside of the auditorium. We've made all the conference materials, including speakers' bios and any associated readings, available through the QR code on the paper program. We are recording today's event, and I'll make videos available in a week or two on the New York Fed's website. Today's conference is also open to the press and on the record. If you want to tweet, we ask that you use #BankingCulture. And so finally then, if you're asked to answer the poll, please make sure you've silenced your phone and any other device. With that, I'm delighted to introduce John Williams for his opening remarks. John needs very little introduction around here. He is, of course, the President and Chief Executive Officer of the New York Fed, and he serves as Vice Chair of the Federal Open Market Committee. So thank you very much, John, for kicking things off.
Thanks, Jim. And thanks to you and the team for the outstanding leadership of this initiative over the past 10 years. It's obviously a very high priority for the bank, and I think more generally. I do have an answer to the question about why we have the curtains open. That was, we redesigned this room and we'll refresh this room we started before the pandemic, we got it done during the pandemic, but the argument was our screen here was not bright enough to let the lighting naturally come in because it would wash out the screen. So what we did, of course, was we got a much, much brighter screen, and so that's why we can do that. So technology is helping us there. So welcome everybody to the New York Fed. Thank you all for joining us today. As Jim mentioned, it's been a remarkable run of 10 years since we first hosted the Governance and Culture Reform Conference. So when I look back, there's a conference in particular that stands out for me personally. It was a warm Monday back in the middle of June of 2018. It was a big day for me. It was, that's because it was the bank's 4th annual culture conference. And coincidentally, or perhaps not so coincidentally, it was the first day for me on the job as the president of the New York Fed. So that was all designed for me to start on the day. It was I was fresh off the plane from California, and I was actually, before the conference, was very focused on something that my colleagues here had been helping me with, and that is I got 3,000 recommendations for where do you get the best pizza in New York. That was obviously very much on people's minds, and was thinking about where I'd get my lunch once I started working here more generally. The Culture Conference was the first event I had in my role as president, and a few things jumped out at me right away. First, clearly culture was a timely and critical topic to cover. Second, there were a large number of people willing to listen, to learn, and engage with one another on this topic. And finally, my new colleagues at the New York Fed were incredibly committed to this work, and that continues to this day. Since then, I've been extremely proud of what we've been able to do in this space. So before we dive further into our sessions today, I'd like to take a broader look at some of the lessons we've learned over the past 10 years and to take stock of where we are today. And in that regard, I thought that quick survey was interesting to see how the people who are attending the conference feel about progress. Now, I need to provide the standard Fed disclaimer that everything I say reflects my own views, does not necessarily reflect those of the Federal Open Market Committee or anyone else in the Federal Reserve System. I'm going to keep track of how many times I've said that in my career. When we started holding these conferences a decade ago, our discussions looked a lot different than they are today. Our main focus back then was around structural changes. Our speakers and contributors were primarily bankers, regulators, finance professionals, and, as Jim mentioned also today, prosecutors. And our events were mostly large-scale gatherings like this. So that kind of makes sense given where we were starting and where we were going then. But now, 10 years, and quite honestly, many lifetimes later, we've learned a lot. We had a little something called the global pandemic that came between, and because of that, and I think taking advantage of the kind of hybrid and remote model, we broadened our lens significantly. We continue to hear from the types of individuals that I had mentioned, but we've also broadened that to include input from multiple disciplines, experts on human behavior, as well as a broad set of industries. We heard from philosophers, anthropologists, neuroscientists, sociologists, and psychologists. We heard from representatives from the medical community, the military, NASA, and the nuclear power industry. And I think this has been a remarkably helpful kind of broadening of the lens, is thinking about how do other industries deal with these issues, how do the other disciplines and other types of experts think about this. So we've learned that others are very, very focused and invested in this work as well, and that broadened our community and expanded our audience as well. We convened the Supervisors Roundtable and the Education and Industry Forum on Financial Services Culture. And importantly, we adapted with the times during the pandemic. We shifted from in-person events to more regular webinars and a podcast called Banknotes, as well as developing our Governance and Culture Hub. And again, I think that evolution to the webinars, which I attended, really did, I think, open our eyes to the connections with other industries and other disciplines. So what has 10 years of this culture and governance work taught us? Let me just give a few examples. One of the first lessons was around what misconduct actually looks like so we can spot it and respond accordingly. While several severe instances of misconduct in the financial services space initially drove us here, we learned that it's not the sole source of problems. Sometimes it's simply an outgrowth of failing to notice or to speak up. Willful blindness, groupthink, normalization of deviance, plausible deniability, these are some of the most insidious norms that can lead to the more systematic issues. And we started to think more about what contributes to a good culture and what allows a bad one to flourish. I remember one of the events where there was a lot of focus, not just on bad culture, but thinking about how do you build a good culture and why that can actually be beneficial to our firm's financial results. From there, we learned that while a tone from the top approach is vitally important, it is insufficient on its own. Standards need to be communicated, demonstrated, and affirmed at all levels, not just by leadership. And we learned that flexing ethical muscles through practice is essential. Finally, I'll mention technology, again a theme today, which was the basis of so many of our conversations over the past few years. We discussed how technology can be a useful tool for diagnosing behavior risk, assessing culture, and designing interventions. Big theme coalesced around remote work, enabled, of course, by technology, which introduces a whole new set of complexities. And moving forward, we'll continue to discuss how AI and machine learning will impact organizational culture as they become more embedded in our day-to-day work. In the past 10 years, if the past 10 years have taught us anything, it's that changing organizational culture is a long-term, evolving, and complex task. But I remain optimistic that we can and we will make further progress. In this anniversary year, we are recommitting to this work and will remain flexible in our approach to meet the times. So thank you to my colleagues who've stuck with this work and have done an excellent job of keeping our programming relevant and dynamic. And thanks to all of you for your interest and your partnership. Looking forward to a wonderful conference today and to seeing you back next year. Thank you.
Thanks so much, John. So before we get to our first panel, maybe we'll take another look at the poll results. How would you rate the financial sector's progress in building organizational cultures over the past 10 years? I take this as pretty heartening. Most of it is good or very good, and very little is poor. So it's a little surprising to me, but glad to see it. So thanks everybody for participating in that. So now I'd like to invite our first panel to the stage to discuss enhancing accountability in financial services. And questions endure about how best to cultivate a sense of accountability among financial service professionals. Our panelists will explore how employees' views about their obligations come to be formed and can change. So I'd like to introduce Olivia Richards, a partner at Oliver Wyman's People and Organizational Performance and Financial Services Practices, who will moderate the discussion. And Olivia will go ahead and then introduce her fellow panelists.
Thank you, Jim. Thank you, John. And welcome everyone to this panel on accountability. Now, everyone in this room is affected by that, whether you're in industry and you hold accountable roles, or you're a regulator and you're upholding standards of market integrity. There's been arguably a lot of activity, as we've seen, to enhance accountability in the industry, both by banks themselves, but also by regulators, say the accountability regimes. And today we'll be exploring more about that. So why do people still behave unethically? What's the industry done well? What can we change? And what can we all do to do tomorrow? And so I'm really honored to be with you all here today, some familiar faces in the audience, but particularly with this fantastic panel. So we have Joe McGrath, who literally wrote the book on accountability in financial services. We have Kelly Richmond Pope, a forensic accountant, as well as a documentary filmmaker. And we have Konstantinos Koutafaris, who's done some excellent work on culture carriers and moments that matter. Welcome.
Thank you.
So each of you has a really unique perspective on what drives human behavior. But I'd love to start with you, Kelly, on what do you think leads people astray? And can we bring to life any specific examples for the audience?
I'll take the first question. So I think what leads people astray is culture. And what I spend my time doing is talking to and interviewing those that have committed white-collar crimes. So I'll go into the prison system, people will write me when they come home from prison and share their stories. And one of the things that they often talk about is the corporate culture, the pressure that they felt to meet a number, whether it be Wall Street expectations, whether it be the expectations of a supervisor, but it always really comes down to culture. Now, as you see, I'm an accounting professor, and I love accounting and think everyone should love accounting. But if you think about what numbers on a financial statement represents, it represents behaviors, it represents decisions. And so they all have to tie at the end, but they represent just a multitude of thoughts and decisions and behaviors, and that's impacted by the culture. So as we talk today, I'll share just different stories of people that I've interviewed that are out of prison, that are still in the prison system, but they all talk about the culture and how that impacted that ultimate decision that led them to go the wrong way.
Thanks, Kelly. And so, Joe, I'd love to move on to you. What needs to change? What organizations have really created accountability structures that tackle those underlying motivations of people? And particularly if we can bring to life any actions that you've seen that are effective versus not?
I think industry is engaged in a whole variety of really great strategies to promote ethical behavior, to improve culture, things like promoting speaking up, encouraging psychological safety, and so on. I'm actually involved in one of those kinds of initiatives at the moment. It's being led by the Irish Banking Culture Board, and it's designing case studies to assist people on how they can be trained on taking reasonable steps to ensure that their obligations under individual accountability frameworks are actually being observed. So that's a great initiative that retail banks in Ireland are feeding into. They're feeding into these case studies so that people, not just in their own organizations, can be trained on what reasonable steps look like, but also employees in a whole variety of other smaller firms across the sector. I do think, there is an important point to be made here, though, which is that industry initiatives, while really valuable, aren't, I think, enough by themselves. And I think that a lot of really positive industry initiatives which have been taken have really been taken as a result of regulatory pressure or public pressure. So the difficulty, I think, really is that a lot of wrongdoing is situational. So people are working within the environments of their firms, they're working within the broader morals of the marketplace, and so there are all these pressures to engage in particular kinds of behaviors in industry. And people are working within environments where it's very easy to develop blind spots. It's very easy to engage in motivated reasoning. It's very easy to rationalize wrongdoing on the basis that everyone is doing it. We know there's a whole wealth of research that says that people are able to convince themselves that they're ethical even while they're engaging in ethical acts. So when we talk about the really valuable industry initiatives that are there, they don't really counter those kinds of problems.
Yeah.
So I think the key really, just to kind of nail this down, is that industry initiatives are really valuable, but that they should operate within what I would call meta-regulation, meta-regulatory strategies. And that's the state regulation of self-regulation. So industry should be encouraged to own its own corporate governance arrangements, but when things go wrong, the regulator steps in, investigates, and potentially holds people accountable. And accountability in this context doesn't necessarily mean sanctions. It can just mean fixing a broken system or learning from mistakes.
Thanks, Joe. Konstantinos, anything to build off there, particularly given Joe was saying about the situational context? Anything that organizations can do, particularly from the bottom, middle up?
No, I think Joe has made a very compelling case about the importance of having sort of outside in or top down type of approaches to enhancing accountability within organizations. But I think it would be a hugely missed opportunity if organizations themselves and employees at all levels actually, and mid-level managers and employees at all levels also enhanced accountability from the bottom up. I think it's a complementary process. It's not a substitute. It's a complementary process that I think needs to take place. And actually, in my research, I find distinct advantages of this bottom-up accountability process. So, in a study, in a research program that I developed with my co-author Adam Grant, we actually invited. It also was in a financial services organization. So if some folks believe that wouldn't quite work in financial services, well, we did it in a financial services organization. So all we did was we asked managers to essentially share the weakness areas from their performance reviews with their direct reports. Now, this is not something that happens very, very often. What did that do? That actually created psychological safety in the relationship, but it also built accountability. So now I know what my manager is falling short on, and as an employee, I can hold them accountable for that. In fact, there were a lot of sharing that was around accountability and specific goals and standards that weren't met. That bottom-up accountability process was a great sort of complement to enhancing accountability. So I think the two are complementary, and I hope organizations are able to work on that process as well.
Yeah, I love that. Joe, so coming back to this regulatory perspective, we've obviously seen individual accountability regimes come in, UK, Australia, Ireland. Can you give the audience sort of a sense of how well those have been sort of perceived and how well they're being embedded? Obviously, they're a bit new, so.
Yeah, no, absolutely. So these regimes have been in place now for some time in Australia and in the UK, more recently in Ireland. At their core, they're corporate governance arrangements. So they're designed to clarify who's responsible for what in large, complex corporate organizations, and then those responsibilities are mapped across the organization so that there are no gaps, really. They're not really designed to be sanctioning regimes or liability regimes. They're more ex-ante corporate governance measures, so they're designed to prompt people to take reasonable steps to prevent wrongdoing from arising. In terms of how they've been working, there have been quite a few surveys now conducted over the last number of years in Australia and the UK, and largely they're working well. Senior people are more able to articulate what their individual responsibilities are. It seems that decision making is slower, which tends to be more reflective and more ethical. Some people are reporting that the industry is more risk averse, but it might just be the case that people are more actively considering the downsides to their decisions, what might happen if things go wrong, and that's not necessarily a bad thing. More critically, people are saying that while behaviors seem to be more ethical, it's not clear exactly what the impact that has been, what impact that's had on the culture of organizations. So is it really the case that values and beliefs and so on underpinning organizations has really changed? In terms of what industry and regulators can do to make these regimes work better, well, I think there's quite a few things that could be done. In the first instance, I think industry can more actively search for problems, proactively search for problems, look for problems on the shop floor, look for patterns of behaviors that are causing problems, look for drivers of behaviors that are causing problems or that might cause future problems. It's also the case that maybe industry can learn a little bit more from the mistakes that are being made. And that means acknowledging in the first place that mistakes happen, and that's okay. Mistakes happen in the workplace just as they do in life.
Yeah.
And I'm sure we're all aware of maybe senior leaders who run good news offices. You know, don't bring me problems, bring me solutions. But sometimes problems are very complex and they can't really be solved by an individual or by a team. You need to be able to go to someone senior, and that senior person has to be able to help you solve that problem. I think senior leaders in industry can probably also work a little bit harder to create more moral climates in their firms. And that means talking about what good behavior looks like here, what the right thing to do is, both in the organization at a local team level where people actually work. It might mean discussing the mistakes that senior leaders have made themselves.
Yeah.
And that might actually, you know, encourage more junior staff to report up issues so that they don't escalate even further, so maybe to prevent future problems from arising. There's also a huge onus on regulators to do more, I believe. And regulators really need to reassure industry that they're going to be treated fairly in relation to these regimes.
And we have a mix of industry and regulators in the room, so it's a great sort of dichotomy. So Konstantinos, coming back to that moments that matter, I know you've done a lot of research here. It'd be great if you could share with our audience some key lessons learned, how people can really capitalize on moments that matter.
Yeah. So in my research, there are really two characteristics or two dimensions of moments that ensure that they're seized. And I think that could be summarized by the sentence of, timing and expectations really matter. So timing, the study that I mentioned earlier about sharing sort of your weakness areas, that happened after a performance evaluation cycle. So there was an existing practice within the organization, so it's very salient. Everyone is thinking about, okay, I need to get better, I need to improve in these areas, and then there's the sharing that takes place. So there's this timing element, this salience, and later I'll talk about my work on culture carriers and the awards that also can sort of leverage those performance cycles and meet sort of, be introduced in moments where they're salient to people. The second part is expectations. So actually I want to do a quick poll myself of my own here, which is I want to ask our wonderful audience if you've shared your development areas or your weakness areas with your direct reports, like have you done that? So put your hand up if you have. So there are a number that have, which is wonderful to see, but I would say it's still kind of the norm that exists within organizations is not to do that, right? So that's where expectations come in. So if you can actually violate or challenge the existing expectation in a positive way, then the element of surprise creates sort of this moment that could be seized, that could be made the most of. And the last thing I'll say on this is combining kind of timing and expectations is I've done some work on pre-boarding employees. So early experiences that employees have with organizations really matter. They have this imprinting effect, they cast a long shadow, first impressions really stick. So when managers reach out to their employees before they even start, so before, between the period of accepting a job offer and joining, that early period is really prime for an imprinting effect. So what I find in my research there is that when managers go out of their way to start building that relationship before even new hires show up on the front door to work, that creates sort of accelerates the adjustment to the culture and the learning of a culture of accountability and builds that relationship of trust that is so necessary so that new hires can actually hold their managers accountable over time.
So important. And it is scary sharing your weaknesses with your team, but I've found that it's been really, really positive. So Kelly, coming back to, you've obviously done a huge amount of work on fraud. And sort of talk about the fraud triangle as a way to understand sort of fraud as a framework. I wonder if you could sort of share with our audience, particularly how they could use the fraud triangle and bring it back to their own companies. So also any examples of an organization that's used it really well, thinking about those three sides, so incentives, pressure, opportunity, and ability to rationalize.
Sure. Well, You reviewed the fraud triangle, so thank you for doing that. But I think what has always fascinated me was the rationalization component of the fraud triangle. And we rationalize our decisions so differently, and we don't always call something fraudulent that is actually fraudulent. And so I think when I listen to my panelists and you both talk about the accountability factor for those new hires, those new employees, that's a really tough balance when you think about it, because the people that are newest in your organization are the ones that see the problems. They're also the least likely to say something because they're the powerless.
Yeah.
And so I think that their rationalizations are very different. So there's a power dynamic when we talk about just different levels within these employee structures that we're talking about. But I just wanted to say that because I was thinking that as you both were talking. But when we think about how we understand fraud, the fraud triangle helps us really give us a good framework of understanding what someone's pressures could be, what someone's rationalizations could be, and what could their opportunities. And I think that the way organizations can use it successfully is really almost hacking your own system when it comes to that rationalization component, because that will let you know the flaws in your system. And when you know those flaws, you can then fix those and improve the internal controls of an organization. But you don't know unless you ask. And if you really go through the practice of thinking about how could someone really defraud our organization, then that gives you the strength to improve your internal controls. Just as a side story, my husband works in technology, and one day I asked him, I was just like, how could you defraud your employer? And he's like, stop asking me that. I don't want to answer that question. And I said, no, like really, I want to know, like, what could you do? And then I had to change it. Not what could you do? What could someone else do? What could someone else do? And so that really lowered his guard, and he said, well, since you're going to keep asking me this question until I give you an answer, I guess I could meet someone, collude, and we could set up a fictitious vendor and put an invoice through, because our limits are so low. Like, we don't have to go. We can put through $1,000 without getting any approvals and just get $1,000 out of the system. So I guess if you're going to keep pushing me on this, that's one thing we could do. 2 weeks later, there was an article in the newspaper, not about him, but 2 weeks later, there was an article in the newspaper about a senior level employee doing that exact issue. So you think about, if you sit down, create a safe space for people to truly share in a truly safe environment, and to understand what some of the weaknesses are in your system, that rationalization component of the fraud triangle could really help an organization improve. Yeah. I think also understanding what pressures are. Everyone has pressure, and I think we spend a lot of time team building. But when we're doing those team buildings, listen to different people's pressure, understand them, because we learn a lot about each other, but we don't necessarily do a lot with it that can help us understand someone's pressure, because we all have it. And I think helping put in place systems that can help lessen people's pressure is really important. And then everybody has opportunity. Whether you have a corporate credit card, whether you have the only access to a system, everyone has opportunity. So that one is really what we all have. Yeah. But understanding the pressures and understanding the rationalizations, I think, would really be key.
Yeah. It's actually interesting, because you said a stat to me the other day, which I found shocking, which was about the amount of fraud losses now versus, do you want to input?
We were, when we were doing our prep, we were talking about organizations that do fraud awareness training. And the Association of Certified Fraud Examiners, in their 2022 study, they do a study every 2 years, found that organizations that do fraud training are 2 times likely to lose less money than those that do. So it goes to show you that training matters, training helps, and really, yeah, I'll stop there.
Yeah. Well, and also that fraud losses now are bigger than they've ever been before.
$5.3 trillion in fraud losses to date, but who's counting? But it's an issue. Yeah. So this is happening every day. So what are we going to do about it?
It's just an interesting stat to correlate with the polls that we had up front, also thinking about the incidences of misconduct in the industry.
And I think what the poll shows is how optimistic
Yeah.
we can be. And despite the fact that we have a $5.3 trillion problem, we're still pretty optimistic.
We're an optimistic bunch here. So, Joe, in your excellent book, you talk about profit motives and whether they can coexist with accountability and appropriate behaviors. Can they? Can we have a profit motive and appropriate behaviors?
You're asking me the really tough existential question
Yeah.
here. So look, clearly there's nothing wrong with making profit. Profit is essential for a bank, just as it is for any company. I think the issue really is that we need to think of banking not just as serving kind of an economic purpose, but also about the broader social obligations that banks owe. And I think we might be rightly skeptical of the claim that banks do God's work, but it certainly is the case that banks do an awful lot of really positive things for society. Banks provide the payment system so we can buy and sell goods with ease. Banks match borrowers and depositors so that money can be put to good use. It's positively associated with economic prosperity and so on. I think the difficulty is that bankers will say they serve a higher purpose than money, but that isn't often realized in practice because that higher purpose pales when faced with concrete financial rewards. So I think the issue is that bankers need to get extrinsic benefits like pay, but they also need to get intrinsic benefits, which relates to, the feeling you're contributing to something bigger than yourself, something that's, purposes that are tied into your own personal identity in some way. And I think the way that happens is that you tie banking much more into community-based activities. So I think banks need to explain to their employees the really positive things banks do in their community, both immediate and broader.
Yeah.
And employees need to be able to suggest ways in which they can do more for their community and have that acted on. And I think the real idea here is that you're trying to not just think about preventing people from doing bad things. You're trying to encourage people to do better things. And that can happen where people feel they're a part of something bigger and their identity is tied up with that. I know a lot of people write about how there should be a hierarchy of banking purposes, that maybe banks would try to serve society first, maybe then consumers, and then make profit. But I don't think that's actually realistic or necessary or possibly even desirable. Really, it's enough that banks would say that they simply won't sacrifice one objective for another. And that's actually probably a more pragmatic way of dealing with conflicts of interest as they arise.
Thanks, Joe. Konstantinos, coming back, we talked a bit about culture carriers earlier, and I'm sure everyone in the audience has recognized culture carriers, people that are so strong that they really drive a culture in an organization, and the kind of influence in practice that they have. So could you share maybe a bit on how to spot those people and how to make the most from them?
Yeah, no, that's a great question. And I want to answer it by piggybacking on something that Kelly said earlier about how it is very difficult for new hires or junior employees to speak up and actually contribute to the culture. How do you make it safer for them? One way to do so is through creating psychological safety so that they feel safe to speak up, they're not reprimanded. Another way is through awarding culture carrier awards, which is casting a light and saying, okay, those are the role models of our culture that exist within the organization, so emulate them, and then people will follow their lead, and then it becomes sort of ingrained into the culture to behave that way. So how do you spot them? One of my favorite ways of how we first started spotting them with Adam on this research is we went around and we asked a simple question. We asked to individuals, we said, if I could talk to one person within the organization where if I spend 10 minutes with them, observing them, talking to them, I understand what culture looks like, the culture here looks like at its best, who would that be? So we kept asking that question, and then you hear actually the same names gonna pop up. And then we spend time with them and understand what do they do. And we ran studies with hundreds of participants to understand how, what are some of the activities that they do. And we really found two types of culture carriers. One are the sort of the culture vigilantes, as we called them, which are the individuals who really go around and confront others. And really, it's your accountability agents, really. That's what culture vigilantes are. So they go around and they'll see somebody behaving in a way that is inconsistent with the culture, and they'll go and productively engage with them and explain to them that that's inconsistent, right? And then the other type of culture carriers are culture reformers, and those are the ones that actually try to promote change and add new norms and values to help the culture grow so that the culture doesn't become a cultural museum. So the problem is, and I'll end with this point, is that organizations actually, when we looked at the performance evaluations of the culture carriers, they were actually lower performers. So they were rated as lower performers. And that makes logical sense to some of it. It takes a lot of time to actually be an accountability agent and go around and do that really important work. Also, sometimes managers themselves get defensive. It's like, so you're doing my work now? Like, as an employee, you're contributing to the culture. So that's reasons why they're rewarded, not as highly as others. So it's really important to reward all contributions, not just the work that you do. It's also how you contribute to the culture in other ways. And I think that's also consistent with this new proposed from 2016 rulemaking on incentive-based compensation, and it's resurfaced now from the FDIC and others, it's not just the financial metrics that should determine compensation, it's also non-financial incentives. And maybe culture carrier awards and recognition needs to be a non-financial metric. And I'm really happy to see some financial institutions actually having those type of awards, because I do think they can help make it safer to speak up from the bottom up.
Kelly, did you want to come in?
I want to make sure I understand.
Yeah.
So the culture carriers get lower rankings, lower performance rankings?
Yes, they're rated as lower performers on average than the non-culture carriers.
But we should be, I don't want to be ranked lower though. So that's risky.
Well, which is why I think performance evaluations, as I said, need to include not just performing your job, but also how you contribute to the organization in other ways. I think it shouldn't be lower.
Okay.
So the current performance evaluations don't account for the benefit of culture carriers in the organization.
So the people that pay, really have this and really make this really important contribution to the organization
should get back.
Don't get any rewards from it, which is very unfair. They end up leaving. You lose essentially those individuals because you don't evaluate them in a holistic way.
Yeah, so change the system, change that, and you'll be able to have this person, this culture carrier, award them. Okay.
Yes, and then other people within the organization will role model that behavior more because they'll sort of see the benefit of it. The organization cares about it, awards, culture carriers, recognizes them every year. So that's the change that needs to happen.
They're like an influencer.
Yes, or accountability agent, or accountability influencer, whichever way you want to put it. But yes, I hope that's a change that happens.
I would actually love, I know that there's a panel after this on technology and culture, and you talked about identifying people through sort of them self-identifying or identifying others. I'd love to see if there's some fantastic technology to identify culture carriers as well, but we'll leave that to the other panel. So I know we're almost up on time, actually. And so I'd love to close this out on sort of more the action-oriented. So for each of you, maybe we start with you, Joe. What is something that people can do all sort of tomorrow to enhance accountability within their organization or on the regulatory side?
I think what's coming through from several jurisdictions now is that increased individual accountability is promoting more ethical behaviors and potentially better cultures as well. Now, I think perhaps it's a little unrealistic to ask industry leaders to go back to their firms and say, hey, you know what we need around here? It's more individual accountability. So the question maybe is, what can regulators do to increase individual accountability? So clearly here in the US, there's no statutory framework for an individual accountability regime like there is in Australia and UK and Ireland and so on. But I would wonder, and this is for the US financial regulatory experts, I would wonder, using the existing supervisory powers that regulators have here in the US, if it's possible to require firms to clarify their corporate governance arrangements such that they are asking firms to identify, well, what are the individual responsibilities of senior people in this firm? And if it could do that, maybe it could ask, well, what are the reasonable steps that could be taken to discharge those responsibilities? And maybe regulators could give some advice on what reasonable steps look like. And if some of those steps could be taken, some of those initiatives could be realized, well, actually, it might be possible to benefit from all those great things that go with individual accountability, increased individual accountability, even in the absence of a statutory individual accountability framework.
Thanks, Joe. Kelly, your 2 cents from an organizational or regulatory perspective.
I think doing a culture audit of your organization would be key. And to do that, you need situations, a situation-based training in order to pull out the truth. And I am very, I'm biased now about how much I think people actually share with you, because I think it's very risky to almost always tell the truth. So you need a scenario where you can put in front of people. So maybe give them do a workshop, do 5 scenarios, use a Likert scale, make it anonymous to find out how people actually would behave. Would they tell you the actual truth and get a feel for the culture in your organization? I think you have to start there first to understand what people even tell you what actually is happening.
Yeah.
And if you don't know the truth, then you can't fix the problem. And I think that it's really hard for people to find their voice. Something that we haven't talked about today, I think we've talked around it, is just the concept of whistleblowing and how important that is when we talk about culture and how risky it is for someone to really speak up. So doing that cultural audit to really understand the tone within your employee population, I think is key.
Yeah, great. Konstantinos, last but not least.
Yeah, so just to piggyback on what Kelly was saying, both Joe and Kelly made excellent, actionable suggestions. On the whistleblowing program, I was really happy to see the SEC's whistleblowing program seeing, and I think it's 18,000 reports, that's 50% increase over last year. And a lot of people will be like, what, you're happy that there's so many reports of whistleblowing? But it actually speaks to how people are comfortable actually to speak up, and that's changing. And there's a long way to go. I think we have a lot more work to do. But I was really happy to see that. And I think some ways to sort of do that, create that psychological safety, as I mentioned, was after the performance evaluation cycle ends, having these vulnerability sessions where everyone comes together and shares development areas from their performance reviews and creates that sort of safety so that people can hold each other accountable. Instituting culture carrier awards, so they're part of compensation, so that you don't have these employees who play such an important role within your organization get rewarded the least, right? So it's important to do that. And seizing moments like early impressions really sort of matter and stick. So how new employees are brought into the organization really matters. So it's important to make those moments count and create that safety and trust with your new hires, so that you can, build accountability in the culture from the bottom up.
Thank you so much, everyone. So we'd love to open up to Q&A. If you have any questions, please do introduce yourself super briefly first, and just conscious of time, so as concise questions as possible would be fantastic. We have some roving mics as well, so does anyone want to go first? Yes, lady in the white top. Thank you.
Right here.
White top just at the front here. Love the front row enthusiasm. Thank you. No.
Just keep talking.
Hello?
Okay, so loved your observation, Joe, about the idea of maybe introducing questions from supervisors around governance arrangements in the US and what senior managers are actually accountable for. Because I'm observing that in other jurisdictions where you've got accountability regimes, they're usually quite formal, a lot more. They've been introduced very formally in the UK and in Australia, for example. What I think you're suggesting is a bit of a softer approach to that concept. And my observation is also that in those regimes where they were formal, there was a lot of fear at the beginning about how this might just be something to impose consequences. So my question to you is, do you think a sort of softer approach, which it's not so formalised, might be a way to introduce these concepts without the fear side effect?
I think that's a really great question. I absolutely agree with you that whether you have a formal regime or maybe an informal statutory regime, what is really key is that regulators are going to reassure firms that they're going to be treated fairly. And that kind of goes to your question about the fear that happens when these regimes are first implemented. And it's not, I think it's not too difficult for regulators to do that if they reassure firms that these are actually not sanctioning regimes. These are not designed to catch you out, to hold you liable when things go wrong. These are corporate governance arrangements. They're designed as ex-ante corporate governance measures to try to prevent wrongdoing from arising. And that means that regulators need to reassure firms that actually they understand mistakes happen too. Things will go wrong. There will be bad outcomes. And what firms are being expected to show is not that they have a perfect culture, not that nothing went wrong, but rather that they'd made efforts to take reasonable steps to discharge their obligations so that things wouldn't go wrong. I think this, I'm viewing this through a particular lens as well, which is, I think that regulators need to start thinking about these kinds of regimes as forms of process-based accountability rather than outcome-based responsibilities. What do I mean by that? There's a real tendency to think of these regimes as outcome-based responsibility schemes. In other words, look, this is your business area. You're responsible for this. If something went wrong, it's on you. If a bad outcome happens, it's your reputation on the line. But actually, stuff is going to go wrong all the time. What we really need to start thinking is whether or not the right processes were followed. Were reasonable steps taken? Can you evidence that? Not can you evidence that nothing went wrong? Not can you evidence that you have a perfect culture or anything else? Because what you're really trying to do here, and I think this is the nub of it, you're trying to reassure industry that it shouldn't be afraid, that it will be treated fairly if things go wrong. Because if industry feels it's going to be treated unfairly, that will drive defensive behaviour. It'll make it harder to learn from mistakes. And what you're really trying to do is the opposite of all of that. You're trying to encourage industry to actively look for problems, to try to resolve those at an early stage before they escalate, before they become more significant problems, and maybe to prevent similar problems from arising in the future.
Thank you, Joe, and thank you for that excellent question. We've got a question over here. Yes.
Hi, my name is Mark. I'm from the Consumer Financial Protection Bureau. I'm a technologist and a cultural anthropologist. I have a question for each of you. It seems to me that companies allow you access into their inner workings. You can ask these kinds of questions. You can run culture audits. Do you have any advice or examples of a company and a regulator together kind of co-creating these kind of culture audits through a place of trust, as Joe had mentioned, so that together they can actually see some of these issues and then together kind of maybe hold the company accountable to say, okay, we saw this together, what kind of roadmap could we take together? Any sort of examples of the co-creation of the culture audit and implementation?
So I say something quickly, which is this is a sort of fascinating, new research project that I'd love to be a part of.
It's a good idea, right?
Yeah, it's a great idea. So
Yeah.
thank you for sharing that. I think there's a lot of benefit in having multiple stakeholders represented as those culture audits are built. Usually organizations will sort of, bring me in and my team to sort of design an experiment or a field study to understand what is the culture like right now, what do we do to improve it. But I think that process would benefit tremendously from having also regulators represented in that conversation as well. So let's talk.
And I think it's a great idea, and this might be my forensic accountant brain, the risk of what you're going to find.
Yeah.
And what do you do with the information? Like, are we really going to see a moment where we find something and we come together as a team and we fix it? I think it's a great idea.
That's the reason it hasn't happened probably, but we can try though. But you're right. I mean, I think the scope of the project probably needs to be, defined in some way. Yeah, I agree.
There have been some efforts to do this, say in Australia, but it's certainly something, I think it's a fantastic question. It'd be great to do. Yeah. The risk, though, is the problem.
Definitely.
I don't know, Joe, if you had anything to add.
No, I actually agree with both of the panelists that the key really is trying to, get people to search for problems so that they're willing to actually engage in that kind of cultural analysis. Because if senior people in firms are worried that finding problems is going to lead to liability, they're not going to run the review.
Exactly.
So, there needs to be reassurance that actually senior leaders, and I'll put this very colloquially, need to dig up dirt on their organization, and that they need to be more comfortable with that, and regulators need to encourage it.
Yeah, and I think when I think about Satya Nadella is a good example at Microsoft, where he came in and he said, I don't want us to be a know-it-all culture anymore. I want us to be a learn-it-all culture. I want to build a culture of growth mindset. What does that mean? That means that we learn from mistakes and we get better. And that sort of opened the kimono in many ways in terms of sort of uncovering pockets of opportunities within the organization. And that's exactly right. I think organizations need to do a lot more of that.
Great, another great question. Anything? Yes, you, sir, in the middle at the back, and then we'll come to you.
Hi, my name is Jonathan Kim with the Federal Reserve Bank of New York. I'm with the Supervision Group. So I have a lot of, experience and insights into these. As you think about the top-down versus bottom-up, what have you seen in terms of proactive, preventive measures in psychometrics and looking at what leaders should be or should have in terms of leading the changes that are necessary at firms in respect to culture and change?
So just a clarification question. So are you saying what kind of individual traits that leaders have essentially empower people that, report to them to sort of speak up and from the bottom up and enhance the culture?
Yeah, and also what kind of tools, what kind of approaches are being taken by each one of the institutions in order to make this happen? Yeah.
No, that's a great question. I'm happy to go to talk a little bit about that. I'm sure the other panelists have great thoughts as well. So what we found and what I found in my research is that leaders who are high on humility, so acknowledge their limitations, are open to feedback and suggestions, are the ones that tend to essentially be more open, create psychological safety in the team and in the culture to empower people to speak up. So humility was definitely part of it, but also just proactivity from employees. I think proactivity is one of the most sort of undervalued traits that organizations should look for in new hires. I think there's so much that you can learn, and Kelly was mentioning this earlier, as a new hire, you're not submerged into the culture yet. So you haven't been sort of biased in the ways that things are done. But if you're proactive, then you're actually going to be able to share that information from the bottom up and do that more often. So that's sort of another part. And then you mentioned practices. So practices like creating sort of vulnerability sessions where you go around the table and then you talk about areas of improvement. I know that's something that maybe might not be consistent with the cultures of some of your organizations, but we've done this with many financial services, other organizations, and it's worked really well. And the intimacy and the vulnerability goes up over time, right? It's a process. But creating these cultural practices so that it's embedded into the culture, it's a routine that happens once a year, twice a year. And there are specific functions and practices that enable people to actually speak up, as opposed to expecting the employees to do it on their own, I think is a really important shift that needs to happen.
Did anyone want to speak to psychometrics point as well? Okay.
You're the psychologist, right?
Yeah, I think there's more work to be done in that area. I think some of the traits that I mentioned, like humility, proactivity, I think is what I would say as important kind of psychological traits that will predict whether there's this bottom-up, voice and suggestion contributions.
And there was a question over here.
Thank you. My name is Crystal Murray. I'm an HR exec with Morgan Stanley. And so I love all of your perspectives. So John, when you talk about not looking at a hierarchy in terms of, is it looking at purpose or looking at stakeholder or stockholder value? And Kelly, I love you saying that you love accounting, but our financials demonstrate behaviors within firms. And then Konstantinos, you talk about changing our mindset and actually in performance reviews, looking at acknowledging culture carriers as adding positive value to a firm. And so it makes me think, how do we then further that by demonstrating that those culture carriers are in fact contributing to financial drivers of a firm. So when I'm thinking about that, have you seen any studies or examples in organizations that are quantifying, I don't know, I'm thinking of things of like less fraud or increasing productivity or better problem solving, but what is the financial value that we can tie directly to these culture carriers? Because we know if a guy or a girl is making a lot of money, it's going to be benefited. But what about the benefit or the financial value of being this cultural influencer?
What a great question.
The short answer is I'm working on it.
Study.
But also like what I've seen, I do have some actually evidence of that. So for instance, culture carriers end up staying with the organization for longer because they built this sort of, okay, so because I'm contributing to the culture, even though it's not part of my job, that means I have a special relationship with the company. So that's a metric that matters because we know turnover is actually very expensive, right? Not just from a cost perspective, from a time perspective. You have to retrain somebody to come in. So I could certainly, connect culture carrying to, lower turnover. So but I'm working on it.
Okay,
we should talk more.
Train them on those pre-boarding moments as well.
That's right.
Yeah. Did anyone else want to cover the financial link or?
I'm waiting for the study. So I can't wait. I'm curious, the profile more of the cultural carriers. And I'm sitting here thinking, if I'm a culture carrier in my organization, I don't know. I'm not going to answer if I think I'm not. But I'm just sitting here thinking, like, do I carry that in my organization? And if I know that I'm going to get rated lower, would I? So I'm thinking. You have me thinking.
That's why it's like it has to start with the organization actually saying, okay, we're going to start actually like casting a light on those individuals who really shape the culture. They're going to be rewarded for that. And I think there needs to be that shift first before we have more of the culture carriers sort of going through organizations and strengthening the culture of accountability.
Her question's a good one because being able to tie.
That's persuasive, then organizations will do it. So hopefully with turnovers, like you want to reduce your turnover, start essentially rewarding culture carriers so that, because they're going to stay longer with the organization. So.
And if they make the organization money, that's a bonus to everybody.
So that's what I'm working on.
Yeah.
Well, that's
Jim
interesting.
is motioning for us to move on. Thank you so much to this wonderful panel, also to the audience for your great questions. Hopefully we can take some of this through into the technology panel, maybe.
but also the actions that we spoke about, I think will be useful as part of the workshop sessions that we'll be doing later in the day. But thank you, everyone.
Thanks so much. That's fascinating. The second panel of the morning is going to look at the relationship between technology and culture. This is certainly a topic that increasingly has been on our agenda for the past few years and is certain to be in the years to come. Moderating the discussion will be Harry Touklas. Harry is co-founder and CEO of Swarm Dynamics and has come to us all the way from Australia. So thank you so much for Harry, and I'll hand it over to you to introduce the panelists.
Thanks very much. So I'm joined here with esteemed panel here, Anita Williams-Woolley, who's the Associate Dean of Research and Professor of Organisational Behaviour at the Tepper School of Business, Carnegie Mellon University. Samir Srivastava, who's the Professor of Business Administration and Public Policy at the Haas School of Business at University of California. And of course, Tom Reeder, Associate Professor of Organisational Psychology at the London School of Economics. So we live in interesting times because, as we're all aware, AI is having its iPhone moment. It's everywhere, it's ubiquitous. And of course, we're here to talk about technology. So what we'd like to do today is take you through, as a panel, take you through a bit of an understanding of what the current status is when it comes to technology and culture. What are we seeing out there at the moment? And then move into, well, if we're talking about culture and technology, how does technology actually measure culture and behaviour? Because there are many who say that you can't quantify behaviour. So we'll talk about that. And then we'll talk about also some interventions, some of the ways we see technology help us actually change culture and behaviour. And then finally, we're going to provide some insight into what we think is the future status of technology, where we see technology going. So what we'd like to do as a kick-off is just go through the panel, but first to you, Tom, because what we want to do is define what we mean by technology in this context.
Yeah, that's a big question. So I think we can think of technology in two ways in relation to culture. And two developments actually that have changed the field. So it's worth just taking a little bit of a retrospect for a second. When people first started studying organizational culture, what you started to see in academic journals and in organizations, maybe let's say 30 or 40 years ago, it was very hard to find out what was in a culture. The only way was to ask people, whether that's through surveys or interviews, or you could engage in an ethnography. But each of these methods has limitations. But in the last few years, we've just seen this sort of explosion, if you like, of digital trace data around organizations. And this is often what people are talking about when they're talking about culture. They're talking about culture that you can observe sometimes in digital data. So imagine interactions online, recordings of conversations, employee feedback, consumer complaints, whistleblowing channels, instant reporting data. Actually, the areas and spaces where you can study culture now are enormous. They're almost too many and too complicated to start to think through. So that's one aspect of technology, where culture is, where you can see it. The second aspect of technology that has changed is how you interpret this. And now we're getting into AI, natural language processing, and advanced computational methodologies. So you have these two changes. You have a change in data, if you like, of technology, and you also have a change in the analytical methods. And I think what a lot of organizations and academics are trying to do is to figure out how to put these two things together and how they both shape how we investigate culture, but how these also change culture itself inside of organizations.
Thanks, Tom. So let's get into our first question, which is really about what technology you're seeing at the moment that is really influencing organizational behavior. Over to you first, Anita.
Yeah, so I think that to build on what Tom was saying, thinking about how culture manifests what it really is this, shared set of understandings or assumptions about how people behave. And sometimes it's tacit. We don't really know what it is until somebody violates a norm, and then it becomes apparent. And so thinking of it in that context, it's not super recent, but it's fairly recent in the context of history, that we've had these technologies that enable us to work with people anywhere, anytime around the world. And so when we think about building a culture in the context of technology that makes a group, an interacting group, consist of people who've never met each other, couldn't recognize each other if they ran into each other on the street, I think that really dramatically changes what we mean by culture when an organization is operating in that way. So all of the technologies, the web-based technologies, the things that we use to collaborate on documents, all of those things I think have had a dramatic effect on culture in organizations.
And you mentioned too that this impact of technology provides somewhat of a more open and transparent culture.
Yes, absolutely. And I think that can be an intervention, in fact, to changing culture potentially in a positive way. But it does offer, it not always, because certainly people compartmentalize even electronic communications and try to keep things from being transparent. But there is that opportunity for sure.
Thank you. Samir.
Yeah, and what I would add to both of these great sets of introductory comments is that over the past decade or so, several of us have been involved in research trying to extract cultural signal out of digital trace data. And so whether it's Slack communications or Microsoft Teams, email, all of these data sources give us potential signals about the culture of a social group. And I think there's been a lot of progress made in measuring that. But what really complicates the story right now is the growth and explosion, really, of generative AI. And so in just a few years ago, we could look at communication on a platform like Slack and draw some fairly credible inferences about the degree of cultural alignment between an individual and the group, or the group culture. But in a world where some proportion of those messages might be generated by an AI tool, to what extent is that still reflective of the group culture? To what extent are measures of culture on such bases going to be biased or overly homogenized? These are all, I think, really interesting open questions right now.
You also speak about the homogenization of culture as a result of technology.
Yeah, so for example, insofar as people are using generative AI tools to help them craft email messages, right? And in the past, we could really observe differences between organizations in language use. So we've done some work, for example, looking at post-merger cultural integration based on the language that people use and being able to detect the legacy organizations they came from 18 months after a merger. That worked in a world where the messages were generated by humans pretty reliably, but in a world where it's a hybrid form of data generation, it's unclear the extent to which we can still get those signals.
Thank you. Tom.
Yeah, I think we at LSE, we do a lot of work looking at external signals of data or external signals of culture. So for example, we look at what consumers, stakeholders, service users say about the organizations they encounter. So to give you an example, we've analyzed over 100,000 complaints sent to the NHS, that's the UK National Health Service, every year. And this data is kind of incredible. Every complaint's on average about 1,000 words. Each complaint represents a little moment of the culture where something has failed, and so somebody has sent a complaint to the hospital. Within every complaint, there is a story of the culture of the hospital, a misdiagnosis, a drug not given, and then the response of the hospital to the complaint is also both a signal of the culture and culture making, right? Because it's a chance for it to learn. And I think this is just a radically different way of thinking about culture, because we move beyond thinking about culture as kind of averages. How do people think on average? But actually, when you study institutional failures, the average is important, but you're interested in the particulars. And I think what this new data and technology gives us is it gives us the ability to look at the particular. And actually the question becomes, well, what are the particulars that we're interested in? Maybe things like psychological safety are very interesting, but that's quite an abstract concept. What are the micro behaviors, the actual things we are looking for and we're interested in inside of organizations? And I think that's kind of the challenge for us all to look at.
Thanks. So one of the things I'm taking away is that it's almost like a double-edged sword when it comes to this technology. On the one hand, it can open up the culture in the organisation, but on the other hand, it can make it more homogenous. And the sort of problem with all that is that, okay, more open culture potentially means people are more happier to speak up because they're not going to be put down and so forth. But from a homogenous point of view, it can stifle innovation. It can stifle creativity. You get groupthink. So there's this double-edged sword to technology and culture. And so, as we all know, culture's never black and white. It's never simple. So that brings us to our next point, which is really about the measurement of culture, how we go about measuring culture. So the question there is, can technology indeed measure human behaviour? Samir, would you like to lead us off on that?
Yes, I'm happy to start. And what I would say is, just as Tom was saying at the start, we have multiple methods for studying culture. Ethnography, which gives us really rich, deep insights into what's happening, but it's difficult to scale. Survey-based assessments, which are easier to scale, but sometimes give you unreliable indicators. They're subject to various forms of self-report and other reporting bias. And technology-enabled tools, which can very quickly give us data at scale and across time, but need to be validated, right? One of the challenges with technology-driven measures is that we can generate measures quickly, but knowing what they mean and what they correspond to in terms of social science constructs or business-relevant constructs is a real challenge. So to me, the real insight comes when we put these different methods together. And I think this can also help with the problem that we were talking about before of AI-generated content, which is when people are interacting, they're sometimes doing so in very deliberative, asynchronous settings like email, where it's pretty easy to port in content from a generative AI tool. But often we're interacting with others in much more spontaneous, real-time interactions. And those are much harder to use those tools for. So I think, to me, the name of the game is around triangulating towards the culture, looking at these more spontaneous real-time communication channels, and pairing that with good old-fashioned survey data and ethnographies, because that's what's really going to help us to validate the technology-enabled measures.
What do you think, Anita? Is it triangulation?
I think that it actually is a wonderful creative challenge to think about the various ways that we can take even data about patterns of movement in a building, or people when they're there, when they're not there. Even if you don't get into the content of what they're saying in an email, who's emailing who's responding, who's not. In fact, my colleague Brandy Avon is here. We've done research with a regional bank looking at some of these patterns and predicting things, such as her student, Evelyn Zhang, predicted who might turn over, who might leave the organization. So I think that there are a lot of things we can already pick up on from these data. And what could be interesting, in fact, is when you're seeing one thing in these trace data and you're seeing something very different in the survey. I mean, that kind of tells you something about the culture when people might say things are great, but then there are other signals that they aren't.
Yeah, I would agree with that. In fact, I be building on that. I think the interesting thing about these data are where they don't triangulate, probably. You know, history of accidents, and whether you're looking at things that have been going on with Boeing or other organizations, it's usually someone, often senior, had a fundamental misunderstanding of what was going on the ground of the organization or operationally. Or people had some assumption about each other that wasn't correct. And the new technology provides a way to explore that. Even kind of going with the example I was giving before about if you're looking at how your stakeholders perceive your culture to be and how you perceive it to be, and they don't line up, that doesn't mean the stakeholders are wrong. Sometimes the external view has an accuracy that the internal view doesn't. And so I think these new technologies have this potential to look at these spaces, or think about what the executives prioritize and what they talk about and board minutes. Well, what is the water cooler chat inside of an organization? if it's not the same, where does the truth lie? And the differences between them, well, that gives you sight of where the culture needs to change and adapt. So I think the technology has this way of introducing new ideas into culture measurement that we've wanted for a long time, but have been difficult to do through, surveys and ethnographies and the like.
One simplistic way that I look at it is I see surveys as what people think, and technology in digital trace data is what they do. That's one simple way to conceptualize it. And I've got my own sort of experience in sort of coming across that with my line of work. So we come into organisations and we use digital trace data to analyse conduct and behaviour. And we turned up to a bank, and the CHRO said to us, we're really focused on speaking up and getting people empowered to speak up. And we're really happy with our latest surveys because people strongly agree that they would speak up if they saw a problem or an issue worth reporting. And we thought that was great. So we ran our technology, our tool, and we found the exact opposite. How did we find that? We found that people were mainly using positive sentiment when they were communicating. So one of the things you can measure is honest language in an organisation with technology. Honest language is the balance or the ratio between positive and negative sentiment. If you want your people to speak up, you would expect to see some negative sentiment in the language. And what we saw was this really strong skew towards positive sentiment. And we thought, that's so strange, right? Because there's a gap there between what the survey says and what this trace data says. So we drilled down deeper. What we found was that indeed junior people were calling out issues. So there was one case, there was a big customer complaint, and this had to be escalated to senior management. And it had a really strong and detailed explanation of what the customer complaint was. And it was a problem. And it went to middle management. And middle management turned this customer complaint in their language to senior management to a very constructive learning experience. Right? Because they were scared to speak up at that middle management level. And it was all positive. It was nothing to see here, no problems. So the experience that I've derived from working in this space is that it's not one or the other. It really is a case of, at the moment at least, using the survey data to tell you what people think and triangulating that with technology to really get a more holistic approach. In fact, what some clients that we work with do is they use the survey data to calibrate the technology, then they use the results of the technology to change the questions, refine the questions to make sure they drill down into the real core issues. At this stage, I'd also like to call out to my friend Olivia Richards, who talked about culture carriers. That was a theme. And I promised Konstantinos that I'd mention it as well, because it is now possible with technology to really understand who these culture carriers are in the organisation. And it's very simple. It's the people that are most liked and trusted. They are your culture carriers. In an organisation, you can tell people who to report to. You can't tell them who to like and trust. But the reason why that matters is because the people that are liked and trusted really have that informal influence. And so, absolutely, the tone at the top is important. The way that the leadership normalises the behaviour they want from their people is important. But ultimately, culture is a local construct at the local team level. And if you can understand how that forms and spreads, you're really tapping into who those culture carriers are. The technology around it is called organisational network analysis, and it is a proven way to understand who these culture carriers are. And there was talk about, well, how can we quantify the value of these culture carriers as well? And there's a really interesting piece of research from MIT, who we work with as well. Professor Alexander Pentland has published a very, very popular book called Social Physics, where he demonstrates that if you drive behavioural change through these culture carriers, that change will happen up to 8 times faster. And it sticks because you're changing the social norms at that coalface rather than just the formal organisational structure. Thanks very much, Elizabeth, and I hope that satisfies some of your questions as well, Olivia. Okay, so on to our next question, because we've digressed a little bit. We also should talk about privacy too, Tom, because that's a real issue when it comes to conduct and behaviour and, of course, data. How do you see that issue sort of being reconciled?
Yeah, so for a psychologist, the most interesting data is usually the most private data, right? So, and the most ethically challenging to get. And when we do experiments, I don't do many experiments, but when we do them, we have this bit at the end where we ask the participants who went through the experiment, we give them the chance to stop the experiment. And if they say this experiment shouldn't continue anymore, well, it won't. We can't do that with this kind of data. We can't do that if you're analyzing somebody's email or their movements around a building, who they're speaking to, were they defensive in a conversation, a call handler speaking to a customer. And I think these issues will become more important because inevitably we will move beyond very anonymous analyses of data to quite fine-grained analysis of discussions, movements, behaviors. I don't really know what the answer is ethically, but I think there is a point at which we will stray into awkward ethical territory where people's behaviors, thoughts are being logged in some way digitally and then rummaged through and analyzed by psychologists or others. And it could look pretty bad from a certain light. It can look pretty good as well because you're trying to find problems. And that is, if you're interested in where misconduct is happening and you want to isolate it, that's how you get there. But there is a trade-off, and it's a challenging one.
So, and I completely agree. I think any of us who do human subjects research deal with these issues all the time. I have been struck, though, by how much we can learn looking at these data patterns without identifying individuals, at least to those who are looking at the patterns. You can still tell quite a lot about even if you know maybe what their level is in the organization and if they're talking at all or not in the conversations that you were mentioning, or if there are certain other subgroups that are not speaking up, and aggregating that to look at it across a whole system can still tell you quite a lot about what's going on without getting into the privacy issues that are being mentioned. And so while I think we should be careful about the privacy issues, I would hate to see us grind everything to a halt and not make any use of the information we could gather because we're concerned about, getting into people. I absolutely agree. You wouldn't want to be making judgments about individuals based on, very detailed analysis of their specific behavior.
I would just add, at least when I do research with companies, and what I try to encourage them to do in their own practice is to operate by a few principles. So the first of those is around transparency. I think people have an expectation that their communication and behavior is in some way being tracked. But the more one can be transparent about exactly how it's being used, those data, and how they're not being used, that can be really useful. A second one is around governance. So, can we put in place relatively neutral bodies that can observe what management is looking at or not looking at and act as a check or balance on the use of those data? Third is around agency. So the more we can give people some autonomy to opt in to certain data uses or opt out of other ones. And of course, if you do that too much, then it's hard to get representative data. But I think for a lot of the types of analyses, giving people some level of agency can make a big difference. And the last one is mutual benefit. So some people might be willing to give up some level of data if they get something back. And a lot of these analyses actually can yield some very useful insights for the individual. For example, about their social network in the organization and how it compares to those of other people. And without those data being shared back with management, a report can be produced for that person that can be insightful. And someone might be willing to give up some data in exchange for learning or insight. So those kinds of principles, I think, are a way to thread the needle.
Thank you. So I guess that brings us now to the so what out of all this. All this is interesting, but so what? Which is about interventions. So Anita, over to you. How does technology facilitate transforming culture? And to the whole panel, what are the more effective things you've seen and ineffective things you've seen when it comes to transformation based on technology?
Yeah, I think that there are a lot of opportunities. And of course, it can't just be a tool. It has to also come along with behavioral change. And the more that leaders can be aware of what's possible and encourage it, proactively, the more effective a tool could be. We mentioned earlier with the new technologies that have been helpful, the possibility of transparency, for example. So there are very commonly used chat platforms now. I won't go into the names of any of them to not leave any of them out, but those offer the opportunity of transparency. The typical tendency when we are communicating with people, whoever's initiating, say, an email is deciding who else is on that thread, but they could always be leaving people out who have relevant information. And so I've seen lots of organizations really transform the nature of how they operate by having more of their communication and more of an open channel, and allowing others to have visibility into what's going on. They may have relevant information. Even if they don't, they may have, then they understand what's happening, why a decision was made, et cetera. I think that even in the banking industry, where certainly there's a lot of information that needs to be kept confidential. I used to also work with the intelligence community. For certain, there's information that needs to be confidential. However, there can be a habit of keeping things confidential that don't really need to be. And so rather than need to know, maybe why not know?
So I would just add 2 points on intervention. One is the use of technology to help design interventions. And I'll give you a quick example of one of those. So I just completed a study on inclusion and belonging in the workplace. And the core premise of this study is that one reason that people don't feel like they belong in an organization is that they're actually structurally excluded. They don't have the right workplace social network. It has very little to do with psychology and a lot more to do with sociology in that sense. And so the idea behind this study was to expose people to others in their organization who differed from them or who were similar to them along some structural properties, some network properties. So to do that, we used metadata of communication patterns to identify the community structure of relationships inside the organization and who knows whom and who doesn't, and then design an intervention to expose people to new colleagues who differed systematically. And we showed that one of these interventions actually did move the needle pretty significantly, even several months after the intervention, on feelings of inclusion and belonging. So that's an example. But the other part is then again on measurement, because especially if we do this in the context of a randomized controlled trial, we can get good causal evidence on which of these different interventions actually has an impact in an organization, and measure that using technology as well.
Yeah, it's a fascinating question around intervention. I think the technologies, my view is that they allow us to precise where the interventions are required. And in a way, you can think about them as enabling organizations to have a bit of what we call, psychologists call metacognition, which is sort of how they think about thinking. And so what some of these technologies are doing through tracking what people say and being able to analyze them, or looking at patterns of communication, all of these things, is that they enable the organization to think a bit about its culture and to identify, well, where problems are and what needs to be addressed. And this is quite powerful when you think about some of the data. So I'm just going to focus for a second on textual data, for example. So if you take your employee feedback survey and you take all those qualitative comments that you get in a survey, some organizations we've worked with, they've have 60, 70 million words of commentary. I mean, this is multiple telephone directories of people writing about the organization. And the analytics up to that point have been people going through Excel spreadsheets trying to find interesting things and building interventions off the basis of this. But actually, some of this technology can take this collective intelligence and almost like zoom in on the parts, the insights from the ground on how the organization needs to change. And I think this is really important. So rather than some psychologists trying to look from the outside to say, here's how the organization needs to change, actually the technology can enable the organization to look at its own intelligence on where it needs to change. And that's where I think the most powerful interventions lie, probably.
Thank you. Let's wrap it up with some fun. So where do you see all this thing going in the future, Anita?
Well, my hope, I'm an optimist, is that we could start to leverage some of the new large language models in particular, to actually facilitate better patterns of collaboration in organizations. And so if you think about the fact that, right now even people will ask Google something that they would never ask a colleague. Imagine if you had other LLM teammates, right, who are part of a collaboration, and you can ask them questions or give them information that you wouldn't tell a coworker, and your coworkers can do the same, and perhaps that teammate could help facilitate some communication that otherwise isn't happening in, say, a conflict situation. I think there are some really interesting opportunities to think about there, of course, within the privacy constraints and also information security constraints in general. I know that could be a big risk, but I think there's some fun opportunities as well.
Thank you.
So I'm not sure if I am on balance an optimist or a pessimist, but
that's why we're on the panel together.
Exactly. But what I will say is what I see emerging is something that I think of as sort of a hybrid machine-man culture in organizations. And what do I mean by that? It's going back to the homogenization. Yes, there's homogenization in the sense that people might be tapping into the same generative AI tools, but we're finding now lots of heterogeneity in how people engage with these tools. So prompt engineering, and maybe there are distinctive styles by which certain groups engage in prompt engineering versus others, which influences the type of content they get back. And so this is, I think we're just starting to sort of see the surface of this, of what this hybrid machine-man culture of social groups and organizations is going to look like. But I think, to me, that's the really exciting research agenda over the next few years.
Yeah, I'm interested in how these changes, that the fact that you can now see a culture and that people outside can see the culture of an organization are changing the cultures. And by that I mean, organizational cultures used to be mysterious, right? So 30 or 40 years ago, you'd see an organization and you'd know, how would you know what it was like inside? You just have to find somebody inside of it to find out. Now, actually, you can look on the internet. There's lots of data about what it is. And this has all sorts of implications for regulation and the likes, because now it can seem pretty obvious from the outside when an organization's experiencing problems, and it seems extraordinary that nobody on the inside noticed. And so I think that actually the transparency of the data itself will have this odd effect on culture, which it will improve it, because now everybody can see it. And actually, if you're not thinking about how you look to the outsider, well, you're probably, that is a risk factor in itself.
Yeah. Fascinating. One thing we've been experimenting with, especially with the advent of hybrid working, is the use of virtual reality and augmented reality. That technology to look at how organizations train employees, how they conduct meetings and build virtual environments in terms of the culture they're looking for. And as someone who's sort of been involved in this AI space for a number of years, I'm also a little bit concerned because can a virtual meeting really replace the trust that builds through a physical handshake? Because at this stage of our evolution as a species, we still rely on those hidden signals of communication when we meet somebody to know if we really like and trust them. And so this whole virtual world is fascinating, but there's a paradox. Because as we weave this technology deeper into the fabric of our organizations, we also need to grapple with this paradox and how we leverage this immense power of AI and technology and the dehumanizing effect that can have on the culture of our organizations. So this fusion of silicon and soul is one way of looking at it, is both opportunistic and also dangerous, in my humble opinion. And the way we deal with this paradox into the future will determine, I think, how successful our organizations will be in terms of culture. Happy to open up to some questions.
Hi there, excuse me, I'm Jenny Minogue from the Central Bank of Ireland. Thank you very much to the panel. You've given me a lot to think about there. And I just want to ask, how might you respond to maybe a criticism that a focus on technology or putting this in places another barrier into what fundamentally is about people sitting down, communicating, about senior leaders just being brave enough to be self-aware and kind of using technology as maybe like a crutch that could just be an extra layer into what, like I said, fundamentally sitting down, talking to each other, being brave enough to have those conversations. Thank you.
Since I was the one who was the optimist about putting more in, I completely agree with you that it could certainly become more of a barrier. Sometimes when I'm teaching sessions about remote teamwork, I mention that often we think of the face-to-face meeting as the gold standard, but in fact, there's a lot of ways in which our face-to-face meetings are really, really dysfunctional and also create their own barriers to people actually collaborating effectively. And so if anything, it would be nice to think about how we could facilitate those interactions as well. I mean, somebody with a skill set that facilitates groups is really, really valuable to help overcome some of the issues, some of the blind spots we all naturally have. And so in my optimistic glass half full perspective, I'm hoping maybe, and even my collaborator Sandy Pentland, who you mentioned earlier, has looked at these things, right? How we can use, say, a display in a real-time interaction in a meeting to make people aware when they're hogging all of the airtime, for example, and things like that. And so I think there could be some nice opportunities there to have some synergies.
That turn-taking process in a meeting is, I think, what we're talking about,
I would just quickly add that in smaller organizations, I take your point that sometimes it can be more useful to just go around and observe, meet with people individually, but in any large organization at scale, it's very difficult for senior management to get around everywhere. And the risk there is that senior management ends up with biased inputs. Based on who has access, who has the network connections to them, and so on. And so I think in some sense, technology can be an equalizer in making sure all the voices and perspectives get heard.
Yeah, I would agree with both of those points. And I mean, if you think about what is culture to the senior leadership of an organization, you can't, especially in a large organization, you can't get out to meet everyone. Culture is the way that you steer the ship. Right, it's how you're trying to direct the organization, and technology is just a way to mediate that steering. That's how I would frame it.
And just to sort of close the loop on that, there's some really interesting research from Harvard that shows that the more open plan your workplace is, the less interface people have with each other, and the more they use technology. The more open plan, the less interaction. And the sort of saying now is, if you want more interaction, build more doors. Office doors. And in fact, there's one organisation we work with that have moved in Manhattan to new offices, and that was the criteria. How many doors will equal how interactive the people will be now? Interesting. Sorry.
Hi, good afternoon. Stephen Scott with Starling. Terrific panel. And Samir, I'm a big fan of the paper you did some years back with Amir Goldberg on enculturation trajectories.
Great to see you.
And just thinking about the comments that Tom just made about technology being used almost as a GPS to navigate culture. And I'll be fascinated to see your work on belonging. I'm wondering, can you anticipate using the sorts of technologies that you've done work with to identify people in the organization who may seem to lack adequate belonging? And if we're trying to encourage speak-up behavior, identifying from whom is it we most need to hear, right? I think a lot of speak-up behavior is let's encourage everyone to speak up and hope that the right people will offer the right information. Can we actually try to identify which people we want to be hearing from most profoundly?
Yeah, that's a great question. So, I think that the, again, combination of survey data plus digital trace data, to me, is one way of getting there. And specifically, if I think about going back to cultural carriers, for example, one way of thinking about cultural carriers is, who are the people who are liked and trusted and respected. Another, especially if you think about a toxic organization, toxic culture, sometimes the people who are cultural carriers may not be liked or respected, but they're still actually super influential. And so I think one of the things that one could do is to use digital trace data to look at whose behavior in terms of how they're communicating seems to be influencing those around them, right? And some of those people are being recognized positively or negatively, and others are not. And so finding those data plus survey data on who's being consulted for what kinds of input can sometimes reveal those gaps. Here's somebody who's influential in the right ways that we care about, but for a variety of reasons is not being recognized in the survey data as being an important influencer, and that might be a candidate for someone whose voice ought to be elevated.
Thank you.
Hi, Scott Gilbert from FIMRA. Until recently, the trend with respect to data has seemed to be all towards structured data and away from unstructured, because unstructured is messy and difficult to analyze. With the advent of Gen AI and LLMs and their advanced capability to consume and summarize and analyze unstructured data, do you see any change in that dynamic or any reversal of that trend?
Yeah, I mean, I would say absolutely, with the caveat that we're still, there still needs to be validation, right? I mean, that's always the case. But it does offer up some opportunity to gauge a variety of things that used to be very laborious to pull out, like sentiment, as well as other themes, right, that might come out of textual data. And a nice thing from a data privacy perspective, actually, but it'll be interesting to see what happens with this in a regulatory sense, you can have a data analyst that isn't the human researcher. And so you can put that buffer of privacy around a data set by having an LLM RA, if you will, pull out the data for you rather than having people wait around in it. And so that's certainly something from a human subjects perspective. IRB was a former role of mine, thinking about the privacy issues and the advantages there.
One quick thing I'd add, I just went to a conference at Columbia where I heard a talk by Natalie Carlson, who's at Wharton, and she has a really interesting working paper looking at how, depending on which LLM you use and which prompt you use, you can get very different coding schemes for the same raw text. And so she's working on how do you actually represent the uncertainty of your model when it's informed by LLMs, because there's actually a lot more variance there than you might expect, and you want to take that into account when you're reporting your results.
I think just to build on that, if I may, you have to think about it in the same way you do when you have humans code data, which is to look at reliability. And so if we think about ways that we might frame what the LLM is doing to sample across the different biases or perspectives, then you can do a reliability check in the same way that we would with human coders. And so I think that's the thing sometimes when there's a lot of debate about LLMs being biased or inaccurate, we just have to think about it in a slightly different way maybe than we have in the past.
I mean, I'll just add, if that's okay. I think it's huge, and I think it's huge because if you think about it, communicative acts are the closest you can ever get to a culture. To see, it's how we make the culture, it's how we share the culture, it's how we describe it, and that sort of combination. But I think it's a combination of the natural language processing and qualitative analysis. I mean, I do a lot of qualitative work, and some of these algorithms, they produce average scores. An average of what? I mean, you're right, what is the average of? It depends what you've programmed it to be. You still need to look at what was said, or what was done, or what was discussed. And that's the sort of the future, I think, of this work, is a sort of mixed data science and qualitative component to check the validity.
Thanks, Tom.
I'm Tracy Saley from Schwab. One of the things we've been really focused on in the industry over the last few years is the use of unapproved off-channel communications and the books and records issues that leads to. Has anyone on the panel seen any correlation between maybe increased monitoring of internal employee communications and employees perhaps using personal devices or using unapproved communication channels?
I'm happy to jump in on that one. So are we talking about the surveillance space specifically here? The sort of financial market surveillance space?
The financial industry monitoring of employees.
Yeah. In terms of the work that we do, there's financial markets which have to be regulated in terms of surveillance. They have to be surveilled. Text to voice for telephone calls and transcription for all the information there. But then there's the rest of the organisation, and they don't have to be surveilled. And the question is, what do you do with them? And the approach that we typically take is we anonymise all the data, so there's no individual that can be profiled or identified. That data is then aggregated, and then it's an opt-in process. So the big brother syndrome is completely removed from that equation. Otherwise, you'll find that people don't like it and they don't engage in it, and they sort of say, what is all this about, why are we doing it, and so forth. So there is this distinction between regulation that requires surveillance and monitoring and the rest of the organisation. We've got a couple of minutes to go. Any other questions? Gentleman up there.
Hi, Jeannie Bickford from BCG. Given the velocity of data that you have access to, are there certain data sources that are probably better quality, more trustworthy to be using? Because I can sense that there's actually lots of volumes of data, but some of it is junk, right? And so do you have a sense of, or rules of thumb in how you think about what sources of data that you would prefer to use in your analysis versus others which have shown poor reliability or poor quality?
I'm happy to go first. I mean, I started off looking at email data, 8, 9 years ago, and analyzing email content. For many organizations at that time, that was a pretty reliable indicator of internal communications. It's become much less so over time. So I would say Slack, Teams communication, generally more reliable, but insofar as one can get access to text messages, more spontaneous communication between employees, that's sometimes even better. And then increasingly, Zoom and other video conferencing transcripts, which is also much more spontaneous. But ideally, one get access to multiple ones of these. What we've done in a couple of settings is gotten survey data and then looked at which of these digital communication sources is most predictive of, for example, a relationship being reported in a survey. And at least in one recent organization where I worked, it was Slack DM messages were the closest analog to self-reported networks.
Yeah, I would concur with that, maybe with the principle being more systems that are closed systems, versus open systems, right? So email is a somewhat open system because anybody, as many have experienced, anybody can send you an email, right? And so suddenly the signal value of how much email I'm sending or getting is not as valuable, whereas, within chat platform or video conferencing, that's more of an invitation-only sort of thing. And that's going to become worse, that distinction, in the sense that as generative AI becomes the source of a lot of things that are put into email, or even worse when you get into social media, it's a lot of noise over the signal. Yeah.
I think it's a great question. And I think one way to think about it is, well, what is the problem you're trying to look at? So if you're trying to find problems in the culture, you want the most unvarnished, independent source of data that will probably be very noisy. And that will be, whether that's people online sounding off about an organization, whatever it is. But it's sort of noisiness, in some ways, is a good trait as well, because if there's bad things out there, it's going to crop up. But if you're wanting to understand more like the average of the organization, or what the sort of overall sense of the culture is, there you're probably looking, I think, more for this dialogical data with discussion, or even just, I think even the comment section I was mentioning earlier, I think even the comment section on an employee survey is incredibly valuable. And so I think it depends a bit what you're trying to do. Are you just trying to get a sense of what the culture is, or do you have some specific concern you're trying to get at? And the data sort of depends which type of problem you have for the data that suits it.
Thanks, Tom. We've got time for one more question.
Hi, Joe McGrath, UCD Ireland. I think bankers have made huge efforts to professionalise and raise their standards over the last number of years, but banking services are increasingly being provided by technology companies. And I think a lot of people graduating from business schools and so on now, people who will go into banking, don't necessarily identify with the idea of being a banker. They're going in wearing a technology hat. They see themselves as being industry disruptors, as innovators, and so on. So the question is, how do you get those kinds of people to buy into the idea of improving banking culture when they don't identify as bankers in the first place?
Well, I guess maybe in part it depends on how you define banking culture, right? Because I think there's also a distinction between individuals who want to be part of an organization and have a positive impact on the culture of the organization versus those who see themselves as more independent. And I think that's also an issue across industries right now, right? But so I think it's a matter of people feeling that they're going to get more, they're going to be able to leverage more of their talents more effectively inside of the organizational context, whether it's a bank or another organization, such that investing in it is going to be valuable to them as well as to the organization. But maybe if banking culture means something different than an organization, perhaps the answer is different.
The word that came to mind for me is identity or identification. And what I was thinking about is, what is the identity of being a banker today, particularly for a young person with more of a technology background, and what are they associated with? And I'm an outsider to this world, but I would say it seems to me that there's some work to be done for the sector in really redefining what the banking identity is all about and how bankers contribute to the greater good. And really thinking about that seems to me important for getting younger people, especially, and technology-enabled people to buy into that.
I think you're totally right about the identity. So if you study something like the aviation industry, ground handlers who drive the planes around on the tarmac they're not pilots. They don't fly the planes, but to them the safety of the aircraft is as important to them as the pilot flying the plane. It's a common mindset and the recognition that you're within a system of sorts. And I can't speak to whether banking has that culture or not, but I think that is about identity there.
Thank you for those great questions. And that concludes our panel. Thank you, Anita, Samir, and Tom.
Thanks so much. Really amazing and daunting, it seems to me. So for the next part of the day, we're going to be joined by Susan Ochs, CEO of Ochs Advisors. Susan's going to lead us in a two-part workshop that we hope will help everyone frame out kind of the discussions we're having and translate the content into tangible progress within their organizations. So turn things over to Susan.
Thank you, Jim. Hi, everybody. Are we ready for our workshop? All right, look at that. We got some energy in here. Okay, super. So, as Jim said, a lot of us we're trying to drive down to actual potential solutions, practical, actionable things you could do tomorrow when you get back to the office, in addition to building some doors, apparently, which sounds like it could work. And a lot of us, how many people here have been to this conference in the past? Yeah, most people. Okay, me too. I've been fortunate enough to be working with these guys since the beginning. And a lot of times we can get into kind of ruts, right, in our thinking and how we try to drive to solutions. So one of the things that we thought, let's see, is this gonna actually, yeah, there we go, look at that. Okay, so one of the things that we thought would be fun to do is to kind of look at some of these topics and the intersections of these topics, because a lot of times that's where you can sort of spark new ideas. So we tried to structure this through the lens of looking through accountability, the morning panel, and then intersecting it with technology, second panel, and then intersecting it also with concepts about groups, which is going to be one of the afternoon panel conversations. And so the idea here, again, is to kind of spark some of your thinking now, and then this afternoon, after lunch, so you go to lunch, you kind of chew on some stuff, and then after lunch, we're going to come back and kind of kick around a couple of ideas that you guys have thought of. So make sure you think of some good ideas while you're eating. All right, so here we go. Well, maybe, here we go. Okay, so we just pulled a couple factors. Again, this is not meant to be comprehensive. This is not me giving you a presentation. This is just trying to spark some ideas to get your thinking going. So we know accountability, I have this nice thing here. We know accountability can be influenced by a lot of things. Autonomy, right? How much autonomy, how much agency you think you have is going to impact whether or not you feel accountable in your organization. The dynamics of the group, how big it is, what else is going on in that group is going to impact it. How serious you think an issue is going to determine whether or not you feel accountable for it. And technology, a lot of aspects of technology impact accountability. And you'll see none of this is black and white, clear cut. It's all nuanced, and that's part of where the magic happens. So that's why we wanted to make sure we highlighted some of these. So they did not bring me here for my graphic design skills, I'm just going to say now. So bear with me here. But so if we have a little graph here, so all the way on the left here, you see more autonomy. Over on the right side here is more control. I'm using the words pro-social and antisocial. Antisocial does not mean the wallflower sitting in the corner at the prom. This means pro-social behavior is the behavior we want to encourage. That's ethical, good behavior. Antisocial behavior in this context means non-compliant all the way to unethical. Okay, we got that. So basically, when you have no control and you feel no sense of ownership, you're not going to be very accountable. It's like, oh, I don't know, I just do what they tell me, right? Everybody knows what that kind of mindset looks like. You can also wind up in this place where people start focusing more on the letter than the spirit of the law, right? We all know this too. Well, I mean, they didn't explicitly tell me it was illegal, so I guess it must be okay, right? You have no accountability for the actual judgment here. On the other side, when you feel like you have some ownership over the decision, you can feel more accountable. That's great. That's what we want to encourage. Now, where it gets tricky is that you can get too much autonomy, and then you wind up with a lack of supervision that people exploit. And we know there's a ton of research in our field that a lot of people have seen, right, that autonomy tends to lead to more unethical outcomes. So what do we do about this, right? And so the idea here is, can we find some middle ground where you've got enough autonomy where people are feeling accountable, but not so much that they're going to exploit it? And one of the tricky things here is that the people who value autonomy the most are the ones who are going to use it to good ends. The people who don't value it are going to exploit it. The problem is, like, how do you figure that out? And maybe actually Samir, maybe Samir could figure this out with his. There's some technological explanation, but for those of us right now, how do we figure this out? And we know, by the way, that having autonomy is also correlated to a lot of really positive attributes with jobs. We see higher job satisfaction scores. You see higher productivity, higher creativity, right? So there are a lot of good reasons also that we want to try to encourage a sense of accountability, a sense of autonomy with this accountability. And so one of the things here that I find really interesting is that you can make some pretty interesting, significant strides in giving people more autonomy without doing that much. And here's what I mean. So when you look at decision architecture, choice architecture, people don't actually want unlimited choice. They don't need unlimited autonomy in order to feel better about the decision that they're making. In fact, people sort of want like 3 to 5 options. They don't need unlimited options. So in this instance, could you potentially give people one additional option, one more thing that could actually give them a little bit of a sense of agency over the decision that's being made and help increase their accountability in this instance? And I'll give you an example. Again, this is really small potatoes, but this stuff can actually matter. So there was a firm that I was working with, and they moved a filing deadline, or they gave people the option, because everybody was saying, like, look, you can't make us file this thing at year end. We're slammed at year end. December 31st is a nightmare. And they said, okay, we'll give you 2 choices. You can either file December 31st, or you could file October 31st. And that one small change of giving people an option when to file increased their compliance in this filing like a tremendous amount. So this doesn't have to be huge things we're talking about. It can be small things. But again, can we find opportunities to create more autonomy? And I'll also say there's a concept that I like to talk about. So in addition to option choices, called bounded freedom, right? And this is the idea that, like, okay, there's a backyard and you've got sort of the fenced-in yard, and the dog can run anywhere he wants in the yard, but he kind of can't get beyond the yard. And so are there places where you can create some of that bounded freedom, where either, their stakes are low enough, or a decision is potentially reversible if something goes wrong, or that you just can't go beyond the parameters? What did I just turn it off? Okay. Oh, I did turn it off. Look at that. Okay. So bounded freedom. You got it. All right. Moving on. Maybe. There we go. Okay. Group size is another one. There's some interesting research. This goes back, I know all my academics here will know this. There's research from the 60s that was conducted in New York City on a subway train. And researchers had an actor pretend to be in some kind of distress. And they monitored whether the number of people on the train impacted whether or not somebody came forward, right? Did people feel accountable to come forward? And what they saw pretty clearly was that the more people were on the train, the less anybody stepped forward. So the larger the group you're in, the less you feel accountable to do anything. And this is a problem when you're in an organization that has more than one person, which I think most of us are in, right? So how do we navigate being in a large organization, right? So down here, you're feeling anonymous, you feel less accountable. Now, you could say, okay, well, we want to just make sure we're creating smaller subgroups, right? We want people to kind of identify with a group that maybe is a subset of their larger division, of their larger, organization, and that's all well and good. The problem can also become you wind up with divergent subcultures, which you also don't want, right? So again, here, this is the idea of can you create a space that feels smaller for people so that they feel a little bit more accountability, while also still staying connected to the larger mission of the organization. And again, trying to balance these two. If you're only talking about the large stuff, people can feel anonymous. If you're only talking about the small stuff, people can start to wind up in subcultures that are disconnected. So you want to find a way to connect those two. And so there's some ways to do that, right? You can think about organizational groups. You can also help people understand their own specific role within the organization. So back to that subway example, you could imagine if you were an EMT on the subway, on that train, you might feel differently about your level of accountability and whether you step forward than all the other random people on the train, because you know that you have a unique role and specific skills that are going to be valuable in this context. Now, once again, though, if you're in a whole train full of EMTs, you might be like, well, Tony's got it, so I don't really need to worry about it because everybody here is trained, right? So again, thinking about helping people understand their unique role and how it's important to this particular group and the larger organization. So the level of seriousness is also something that's going to impact whether or not people feel accountable. Back to our subway train. I hope a lot of people took the subway here, so it feels relevant at least. On a subsequent set of experiments on the subways, they found that when the actor seemed in enough distress or was in imminent physical danger, that actually circumvented the other results so that people were more likely to speak up regardless of how many people were on the train. So a level of perceived seriousness of an issue is going to help boost accountability. The problem is you got to be selective about it, because otherwise, people start using their own criteria. If everything is a 3-alarm fire, then I'm just going to decide what I think is actually important, and I'm going to use my own criteria, not whatever criteria you want me to use. And so the idea here is be selective about which are the things that are like DEFCON 5, and then for the things that are less serious but still obviously important, how do we create understanding for the reasons behind stuff? A lot of the work that I do is around mental models and kind of assumptions that people have around why they do or don't need to do things. And really helping people unpack what's the true underlying mental model you have about doing this thing or not doing that thing can actually have significant impact on their compliance and outcomes for control functions. So digging in a little bit more of the psychology behind why people think, and again, it sounds like filing a form, like how much psychology could there be behind it, but you'd be surprised when you start asking questions. So starting to really kind of dig into some of those things. And then technology. As we heard about, I didn't even bother filling in the less technology side because I don't know any organization that is moving towards less technology, right? Everybody's going in this direction. So as we heard from the group, we heard a lot of really interesting ideas about how technology can be helping, even on accountability, right? You get enhanced oversight, you can get additional information, a lot of really cool and interesting kinds of information that maybe we didn't have access to before, and that as a manager or even as an individual can help you feel a lot more accountable. On the downside, you kind of getting, more technology creates distance. And we know that that's one of the conditions, the distance from the event or distance from the crime is one of the reasons that helps people justify bad behavior, because they kind of can't see the impact. And so a lot of times when we talk about it, it's like, how do you close the gap? How do you reduce the distance? I would also argue that I think technology can wind up in a little bit of the subway problem, what they call the diffusion of responsibility, right? So on the train, well, someone else is going to take care of it. In some cases, I think in technology, they're like, well, the algorithm's going to figure it out, or I don't have to worry about it because there's some technological solution that is going to deal with this and fix it or figure it out, and so I don't have to be accountable for this. So I think that there are, interestingly, I thought the panel was nicely balanced between optimists and, let's say, concerned. I don't want to call you a pessimist, Amir, but nicely balanced in the outlook, and I think we see that here as well. So here's a bunch of, these are just kind of some of the ideas I've been sort of talking through. But these are some ideas, again, in addition to your doors, of how we can think about increasing accountability, right? So finding opportunities for bounded freedom, offering even one more additional choice, creating trials with lower stakes or reversible decisions on technology. Are there ways to maintain an aspect of human involvement, both in how you design the systems and in interaction with the control functions? And with all the talk that was going on in the beginning around people who have just started and the importance of the onboarding or pre-boarding process, this could be a really interesting point to make sure that it hasn't completely gotten overtaken by technology. Like making sure there's some human interaction from control functions with employees when they are first starting could be a really powerful way to kind of reinforce some of these and reduce the distance gap. The seriousness differentiating between urgency and materiality, right? Not everything's a fire drill. Helping people understand the impacts and really targeting some of those assumptions and mental models underlying. And then group size, helping people think about how to reduce their perceived group size, while at the same time emphasizing their unique role and the responsibilities of their role, and then also emphasizing, of course, the mission of the larger organization. So we're going to leave you here with this. If people have thoughts and comments now, I'd love those. If we have time. Do we have time? We do have time. OK. If people have thoughts and questions now, we'd love to surfacing those. But your homework is going to be, over lunch, start thinking about things and try to come back with, what is one thing I could do when I get back to the office tomorrow? What's one thing I could do? One additional choice I could give somebody, one aspect where I can integrate some more human involvement, one place to help people understand the whys, or something of your own. One practical thing you could do when you come back to help think about increasing accountability. Thank you very much.
Thanks, Susan. Susan's going to rejoin us and complete the midday workshop. So back to Susan.
So back to the business at hand. You had a good lunch, you got some sustenance, you have some energy, hopefully not too much so that you're in food coma. So what kind of ideas have percolated? And comments or questions or thoughts are also good too. We want to just get people kind of thinking, but we'd love if you thought, here's what I'm going to do when I go back tomorrow. Who's got some ideas? Who wants to start? I think their microphone's roving. Yes.
Hey, great session. So I actually, getting back to basics, is making sure everyone in my team is super clear on who is accountable for what and exactly what that means.
Great, so defining roles.
Exactly.
Excellent.
Yeah.
Super, that's great, thank you. Anyone else? Other thoughts? The people that had the misfortune of having to have lunch with me, I'm gonna get to you in a minute. But I'm gonna let some other people go first. Thoughts, ideas? Who wants to save Susan Axelrod? I know some of you have ideas and thoughts and even critiques, right? We're trying to have an open forum, which I know is not always feels so comfortable. Here's Susan. She's just going to jump in.
Fortune of having lunch with Susan, so I knew I was probably going to get called on. So in terms of accountability, one of the things we talked about at lunch was the story of riding the subway and a crowded subway and who's going to help, and the more people that were there, the more people would stand back. And that really resonated with me as someone that rides the subway every day, so I thought about that. One of the things I'm going to do when I go back to the office is continue a practice that in particularly like my team meeting, you have extroverts who love to talk and could fill up the whole time, and then you have introverts who sometimes like to sit back and have the best ideas. And so I think sometimes the accountability is best when you actually have to reach out and call on people to speak about something, to address it, and then you're setting the tone and culture for it. Everyone in this room has a role and responsibility, and whether you're going to volunteer it or not, we're going to have a two-way dialogue, and if I have to reach out to get it, I'm going to. And I feel like those that are unprepared sometimes, who kind of sit back, once they get called on once and they don't really have anything substantive to say, that's never going to happen again. So I think that accountability happens through kind of the interaction, the way meetings are run, and the dynamic there a little bit.
Awesome, awesome. Thank you, Susan. Yeah, did you want to? Yes.
Hi, thanks. Sorry, the same person but different comment or reflection. One addition I had to this as well is actually how much the context matters. So my observation is where you might have a team or subculture where there is a lot of blame and low psychological safety, it deters accountability because people don't want to take ownership or responsibility if things go wrong, because it will have a clear downside. So I think the context is quite key as well.
And are there any particular steps you might take to help either clarify the context or?
So I think improving psychological safety at a local team level can be important. Yeah.
Yeah, sure. Great. Other thoughts, questions, comments, ideas? Yes.
Hi. So the concept of bounded freedom, I struggled with because I think if you're not careful with it, you can create a circumstance that breaks trust between you and the employee, because they may think, well, you're not really delegating to me, you're not really giving me autonomy to be accountable. You're keeping your thumb on the scale, so to speak. So I think it's important to find areas where you can keep that level of trust, really through mutual communication and expectations in terms of what do I feel comfortable delegating to you, and the other person understanding that they're going to be have to answer for the results or for whatever the deliverable might be.
Yeah, great. And the word you used with me over lunch was authenticity, right? I can't sort of pretend to give you a little bit more choice or pretend to give you a little bit more freedom when I don't really mean it, right? You've got to really mean it. And so that's incumbent on us then as managers to find the places where you can do it for real, not as a kind of, as a window dressing kind of for show. Other thoughts, comments? Yes, we've got one here. Oh, I'm sorry, and there's one there too.
Hi there. So the concept of seriousness is one that resonated for me because it all goes to prioritization. And that's something that I have found, not just in my current organization, but in previous organizations we always struggle with. So we're always kind of wanting to boil the ocean and get everything done, when in reality, it doesn't happen that way. And so that's the one, it resonates for me, but I also grapple with, candidly.
Yeah, yeah. There's a comment here, and then there's one over here too.
I think the other thing that I haven't seen here, but it really resonates, is so we call it freedom within the frame. So it's the same thing for opportunities for bounded freedom. So you have that frame to be free, but you also have to be willing to have things go wrong. So it's that failure, that fast failing and learning from it, because without that, then it's really difficult to have people kind of stretch a little bit.
Yeah, that's a great point. There's a, over here.
So I'll build on that because it was the bounded freedom mixed with the technology that made me think of all the kind of evolving attitudes towards remote hybrid working, coming back to the office. It's not a set it and forget it. So I think there's a lot that can be done there to set the context for continuous involvement from employees in how's it going, that constant kind of learning culture and experimental approach. But the bounded freedom is a huge part of that because it's not necessarily a free-for-all. We're not saying, everybody's wishes are going to be met, but what is possible for the organization, what is needed for staff, and how do we find that kind of optimal balance? Those exciting things to keep testing.
Good, super, yeah. Testing is another great concept we didn't talk that much about, but some trial and error in this, and permission to fail, and even just try new policies is a great concept. Yes?
So one of the things that resonated with me was group size. And I think one of the things that I can take back tomorrow is looking at the size of our meetings, how many people are coming to the meeting, because I think the more people you have, the more likely you have to have the bystander effect that I think Susan was talking about. The other thing I would say is what gets recognized gets repeated. And you talked about, someone just a minute ago talked about failing fast. And I think recognizing when someone does that and making that something, sounds odd, but to celebrate, because if people see that that's okay and it's actually going to be favorably viewed, the chances are they will, someone else will do it next time.
Yeah, that's a great one. So smaller meeting size is a really practical, actionable one you could take home tomorrow. I've seen some firms have a lot of success with celebrating the failures, right? Fail fast, and we all celebrate, and then we, take the learning. So that's part of the celebration. But yeah, that's great. Great suggestions. Other thoughts, comments? Yes.
One observation I had looking at this page is the interplay between seriousness and autonomy. So we talk about wanting to give people a bounded garden, but I think you can only do that if you've got an accurate assessment of seriousness, because otherwise you can't even bound the garden because you don't have a sense of what's serious versus what's not. And I think that comes down to often to maturity as well. Like, do we have a sense about what's seriousness versus what's not?
Yeah, absolutely. I mean, and the point here is hopefully clear, right? We're talking about the intersections, that they're all related, right? Culture would be really easy to do if it was all black and white and it was all compartmentalized, but all these things impact everything else, and so thinking about them kind of in concert is part of the goal here. So that's great, thank you. Other comments or thoughts? I think I saw a hand up someone in the back, no? One more really good one, and then you can get onto your panels. There we go. No pressure, though. No pressure to round out the entire workshop.
This is kind of a Debbie Downer, maybe. All of these resonate, and I think success in each of these four really brings it all together. And yet, each of them don't help us overcome the negative cultural carrier. And nothing can defeat that unless you specifically take that out. And that's oftentimes the challenge.
The individuals that are, you're saying the negative individual.
An individual local group leader who is a negative culture carrier. Each of these cannot defeat that negative cultural impact.
Yeah, I think I would argue maybe it depends a little bit on how they're operating. One interesting note is I think we've moved away from all the conversation about bad apples to negative culture carriers. So that feels like a positive trend in terms of how we talk about banking culture. We're not just trying to blame a couple people. I do think, though, if you build a strong enough culture, on the peer level, right? If you have a negative culture carrier, if you've got enough people feeling accountable on the sides of that person, it can start to get a little organ rejection for that person.
Yeah, and this is a myopic view of very myopic view of certain individuals. Usually, this wins the day.
Yeah.
This absolutely wins the day. And then on those myopic individual, very strong negative influences, it's hard to overcome that, no matter how much you succeed here.
Excellent. Thank you all so much for participating, and hopefully we've given you a little bit of fodder to go home with and drive some actionable results at home. So thank you.
Thanks so much, Susan. Super helpful. I'd like to invite our next panel up to the stage. They're going to be discussing the importance of building cultures of imagination and integrity. Overconfidence and a failure to imagine what could go wrong, we know can have catastrophic effects. So this panel is going to explore how future thinking can support cultures of learning and forward risk identification. To lead the discussion, I'd like to introduce and welcome my colleague, Kartik Athreya, the Director of Research and Head of the Research and Statistics Group here at the New York Fed, And I'll then pass it on to Kartik to introduce his panel.
Jim, hopefully you can hear me okay. I'd like to welcome my three panelists today to the stage, and I'll start with Regina Joseph in the middle. She's the super forecaster, and we'll get to that towards the end, and the founder of Sibilink. Gary Klein is sitting next to me. He's the president of Macrocognition. And Evan Norris is our legal eagle from the Cravath, Swain and Moore firm. So welcome to all three of you. And I'm going to today focus a little bit on the question of imagining and really the extent to which one can foster thinking about what can be, what might be, and in a way that hopefully allows us to, as organizations, to get around the problems that we've been talking about today. So the first thing that I want to broach with all three of you, and I'll start with, you can kick us off, Gary, perhaps, is we're really trying to think about building cultures that encourage forward-looking risk identification. That's one key dimension. This involves imagining what could go wrong and being very creative about that. And obviously, in reality, we're all here because data happened to us in terms of people not maybe thinking about what could go wrong and then having that thing actually come to pass. So starting with you, Gary, why is it so important to you to think about encouraging actively norms of independent or counterfactual thinking? And if there are examples that come to your mind in terms of when you saw that done well and when you saw it done terribly, that would be useful.
I have examples of both, unfortunately. So I'll start with the example that went well. A number of years ago, we developed a technique called a pre-mortem technique. And it's a technique for risk assessment. And it sort of caught on in a variety of different sectors in ways we never expected. The pre-mortem technique is fairly simple. At the end of a planning meeting, you gather all the people around the table. They're all excited. They're all enthusiastic. They're all optimistic. They're probably over-optimistic. And you say, now we're going to run this pre-mortem exercise. I'm looking in a crystal ball, and it's not a real crystal ball, but I hold my hands up as if I was holding one. And I said, I'm looking in this crystal ball, and we've done this project, and it's now 6 months later. Oh, not a happy image. This is a crystal ball that's infallible, never lies, and it's telling me this project has failed. Doesn't tell me why, but it's telling me that it's failed. So we all know, despite our enthusiasm, the project has failed. Now, each of you, take 2 minutes and write down all the reasons why you think this project has failed. And people go crazy writing down all the reasons. These are people, if you had done a simple critique, here's the plan, anybody see any problems? Nobody would say anything.
I see.
Nobody would risk. Nobody maybe was even thinking that there could be a problem. Now they're killing themselves to write down. Not only are they killing themselves, they're competitive. So if you're looking over, I don't want you to see what I wrote because I want to have better reasons than you did. And it works. So I'll give you an example. We developed it for our company, and then we had a big Air Force contract, and the lieutenant colonel who was in charge of it assigned us to be in charge of several different companies to build this new system. And it was going to be very exciting, very complicated, very difficult. And I said, it's going to be a 3-day kickoff meeting. At the end of the 3rd day, I'm going to do a pre-mortem. And my contract monitor, Dave Artman, the lieutenant colonel, said, absolutely not. Because it's too depressing, too discouraging. I don't want people to walk away feeling beaten down or frustrated. And I said, Dave, we're in charge. Trust me on this. Very reluctantly, he did. So at the end of the 3rd day, we did a pre-mortem, and we'd been building this, designing this system that was going to be rolled out by the Air Force, and it was going to be a great system. And there's one young Air Force captain who hasn't said a word in 3 days. It was his turn. We go around the room. What's your reason? What's your reason? What's your reason? It's his turn. And he looked up sheepishly and he said, the system you're planning to build runs on a supercomputer and it takes 2 days. Out in the field, they've got small laptops. It's never going to happen. There was silence in the room, and everybody realized that he was right. And he essentially saved us from a disaster. And then somebody else said, I have a back-of-the-envelope method that's not as good as the supercomputer one. It's about 80% as good. And all of a sudden, we were back in business. So that's an example of what a premortem can buy you. It changes the mindset. Having the mindset of a failure releases people's inhibitions for speaking out. So that's the positive example.
I think that's a really interesting example it's also making me rethink failure being an orphan. Apparently it's got many parents that are ready to claim it right away. It's the framing also is remarkable to me that it matters. So
would you like to hear the negative example?
Yes.
Okay, this is the 3 surprise example. We did this project in Singapore. And I did it with a guy named Dave Snowden, no relation to Edward Snowden. Dave Snowden is one of the gurus of knowledge management. And we ran 7 different groups. Each group was made up of 4 people. And we had a scenario. They were going through the scenario. And it was a garden path design. What a garden path design means is we put them in give them the idea about what's going on, and as the scenario develops, they just proceed that way, but of course, that's really not what it is. And we start dribbling in contrary cues, and we want to see when they'll wake up and say, wait a second, it's something else. And so we were measuring how long it took before they got off the garden path. And the results were clear and depressing and surprising. The 7 groups that we ran, not a single one got off the garden path. They held on to the deluded idea all the way through to the end. That was the first surprise. Second surprise, we had everybody in each group with a laptop writing down their impressions as this went on. And after the study, the exercise was over, we looked at what they wrote. In every group, there was at least 1 person, sometimes 2 out of the 4 people who had noticed the problem.
I see.
But they never said anything. So if you think of a team mind, it was in the subconscious of the team mind, but it never got articulated. So a few years later, I briefed these results to the DIA, Defense Intelligence Agency, and I described it. And one senior analyst in the audience said, that's Singapore. It would never happen here. We tell our analysts, if you see any problems, speak out. You're supposed to let us know if there's an issue. That's the culture that we've established. That's what we tell people we want them to do. And one very brave junior analyst raised his hand and said, that's what you tell us, but we see what happens when people speak out. We see what it does to their career. And the senior analyst was shocked. That was the 3rd surprise. He'd been living in a fool's paradise. He thought that just because he could issue that directive, it would actually take hold, and he ignored the other forces that were working against it.
These are great examples of unleashing the negative forces for good that lurk within. Yeah. Regina, I'd like you to take up from where.
Yeah, I mean, I think to build on Gary's experience, you know, one of my current clients is the Marine Corps. And so Karthik introduced me as a super forecaster, which some of you may or may not have heard of. That is one role that I play, but most of my work is as a technologist. I build platforms and systems. I'm a cognitive science researcher. I'm also a defense analyst. So a lot of the concerns that people have about building systems is about, can you imbue these systems with the typical types of things that we would like to see in DEI, for example. You want to see transparency, you want to see equality, you want to see diversity, you want to see inclusion. So, but especially in status or hierarchical systems, that's not always an easy task. So what do you do? And I think that the interesting thing about when we talk about forecasting, whether it's super forecasting or vanilla forecasting or whatever you want to call it, is that the actual technical systems that we use to facilitate forecasting. If you think about what a forecast is, every single decision that we make is ultimately predicated on a forecast of some kind, an outcome. So you want to make a decision that moves in the direction of the desired outcome, right? But built within that are all of these other elements. How do you process, gather, and synthesize information? What kind of information are you using? How well are you mitigating your own biases in interpreting that information? How are you registering your confidence about that information? And how do all of those factors get built in and expressed as a probability of an outcome, right? So it's technically complex, but ultimately it's actually quite simple because all of us do it every single day, every single second. Our brains have physically evolved to be prediction machines. So what a forecasting system allows you to do is it allows you to independently and anonymously take in inputs from a variety of different people, and they could be lowest on the totem pole, they could be highest on the totem pole. In a good forecasting system, none of that matters, and nobody else can see it, right? So people are asked to express their true feelings about what an outcome might be, and then they're evaluated. They're assessed on a metric that's built around accuracy. So in the process from start to finish, you are gathering a lot of information about the individual participants active on a platform like that, not only about the decisions and the judgments that they make, but also what are the hidden patterns in that judgment and decision making that can't necessarily be expressed in an environment where people can look at each other face to face. It mitigates a lot of the typical biases that you have in groups, not all, but many of them. And it can help to correct group environments where, for example, the people who speak the longest and the loudest are people who have the highest pay or who are the most popular or most liked. How do you undo that? You have to have systems that provide that kind of anonymity as well as independence of thought.
Thank you. Evan, go ahead.
So I come at this, I'm a lawyer, and I've spent number of years studying organizations and organizational dynamics. As a prosecutor, I did that for 10 years for the Justice Department, and also have been a lawyer in private practice for about 7 years, helping clients with a range of enforcement and regulatory matters. And I sort of see the world in a very sort of practical way. I sort of see the world and see these different types of problems that organizations confront, and put them into two buckets. They're not perfect, it's not a perfect split, but sort of how I think of it. One is where you've got compliance problems of some sort where the people involved in creating the problem are doing something that they know is wrong, taking a bribe or falsifying data or doing some other type of behavior that they're conscious is improper. What I find, and I used to love that quite a bit. I used to, in my old job, working on matters related to that type of behavior. What I find, frankly, to be the most challenging, though, is in my current role, is regulatory compliance, where the issue is not how to discourage bad behavior, but how to encourage compliant behavior, especially when you've got a large organization, a very complicated regulatory scheme, and a number of people involved in ensuring compliance. Such that that the sort of task of doing the work and being compliant with it is sort of atomized and spread out throughout an organization. So you might be thinking about AML compliance or sanctions compliance or other types of regulatory regimes where there is a lot to do. There are a lot of human decisions. There's a lot of technology that comes into play, but it's spread out and spread widely. And the challenge I see in that I've been thinking the most about today as I was listening, especially to the workshop, is this word seriousness. And the thing that I've sort of most interested in is that I think it's very difficult in that type of setup for any particular person to actually understand how to what the overall objective is and how their work sort of relates to the broader whole. It's really complicated. And that dynamic, which I think is really significant in a lot of these different types of regulatory compliance issues, means that you have these dangers where people sort of essentially go on autopilot. They do what they do, and they don't know how it fits into the whole. They assume that there's a lot of churn in organizations. They assume that whoever was doing what they're doing now before them must have been doing it the right way, and so they continue to do it the same way. The people who are charged with really understanding the risk and really understanding the level of difficulty in achieving compliance are not the same people who are doing the job, right? They're not the people who are doing the work itself. So there are people in every organization who absolutely get it. They get the regime of rules, and they get why it's important for the organization. But invariably, you've got then dozens or even hundreds of other people who are charged with carrying it out, who don't know how it all fits together. So one of the most recent examples that I'm thinking of with one client that I found just fascinating is, again, no question of anyone doing anything wrong, but you've got a group of people who've all been trained well and understand conceptually what the regulatory regime is and what it requires of them and why it's important. They all get it. And then at the same time, they have absolutely no idea how that regulatory regime translates into their day-to-day activities. And even when sort of problems begin and they're sort of really trying to work it out, can't make that leap. And it's not, they're very smart people, they're very competent professionals in many ways, but that ability to kind of get down to the level of granularity where the people really understand how their work sort of relates to the broader whole, I think is really awfully difficult thing. And thinking about your example on this pre-mortem, I think it's a great idea, but I could imagine a scenario where if you had a room full of people, there's some that if you then asked them what went wrong could tell you, fairly senior folks, maybe folks who are more connected with the compliance organization or the lawyers. And then there are others who, even if you gave them that opportunity, they couldn't tell you. And that, to me, almost, I could imagine being a really great sort of exercise to conduct, because you get one set of folks who'll tell you what it was, and you can then incorporate that into making sure you don't make those mistakes. But then if you identify some folks who, even given that chance, aren't able to sort of piece together how their work connects to the whole and to the sort of overall compliance objective, that tells you a lot too. So that's an observation to start us off with.
Let me actually follow up on that. So to the extent that you're in a relatively rules-based environment, which gets your attention and then maybe relieves you of the obligation to think about how it aggregates to outcomes, what are ways that you've seen, or have you seen ways of kind of overcoming this a little bit, and sort of, as you talked, I thought about exhorting people about the mission, but then that's naive and ridiculous. So the question is, like, how can you get these things to balance if you've seen instances of it?
Yeah, I mean, I think exhortation in this instance doesn't work, right? Because people hear it but don't know how to translate it into what they're doing.
Point earlier,
right?
Yeah.
So I'm thinking about this right now as we imagine remediation, and one strategy that I'm thinking about right now is how to really break a big organization down into component parts and then make sure there are enough people within that have the task of then acting as a leader and conducting the pre-mortems, right? Acting as a leader and then having actual contact with everyone in their organization. So you identify through sort of forcing people to articulate what they do and how it relates to the whole, where there are people who don't get it necessarily, and then fixing that. But you've got it's a scale question, as we talked about earlier. I think 5, 10 people, something like that, seems like the only realistic way to actually suss out those who aren't understanding that kind of connectivity.
And maybe you need a designated naysayer, I mean, to the extent that somebody's not willing to come forward to say what's wrong. But Regina, go ahead.
I mean, I don't know about a designated naysayer, but I think that, ultimately what I'm interested in doing and what I try to do with my clients and the organizations that I work for, or governments that I work for, is ultimately about building collective intelligences, right? Where we understand something about the people in those collectives. And so this goes to a participant asked a question previously in the first panel about psychometrics, right? So developing assessments of the people who are in those groups so that you know something about, does this person tend towards being overconfident? Does this person tend towards a certain type of bias? Does this person, tend to anchor very heavily on certain types of information, right? So the first trick is understanding something about the groups and the psychometric behavior or the psychographic behavior of those groups. The second part is how are you positing the questions that you want some kind of response to for these groups? Because how you direct those questions actually matters. The rigor of the question, the relevance of the question, does it actually get at what you really want to know, or are you substituting an easier question for a very difficult, complex question, which is really what you want to know, right? So often there's a substitution problem that happens when you're trying to assess a difficult issue. The third issue, of course, is training. Most people just simply do not, everybody, and I've done, almost 2 decades of research on this, but most people tend to think of themselves as pretty good forecasters, that they're pretty good at anticipating what's going to happen. The truth is that when you put people to the test, most people are terrible at it. But the good news is that you can train people to be better. There are some simple, basic techniques that we have shown in research over and over again. Yes, you get material, statistically significant improvements in accuracy, decision-making, and judgment when you train people properly. But also, what is the technical environment in which you're asking people to register this data? And what kind of data inputs are they getting back? So the platform matters. And then ultimately, it's the aggregation of, if you've got, say, 20 people in a group, and you're asking all these 20 individuals to opine on what they think is going to happen, let's say around interest rates, right? I mean, all of the people that are in my orbit who work in the economic and econometrician fields, almost every single one of them to a one said that interest rates, Fed is going to drop those interest rates by Q2. Well, I think if that we assessed, predictive accuracy on the basis of that kind of group collective understanding, they would not have been assessed very well. So being able to take all of those individual anonymized responses does a couple of things. One, it gets at people in your group who may not be able to feel comfortable with expressing their true opinion, or that they may have experience that is perhaps not directly relevant, but is sufficiently informative to actually get to better thinking, better judgment on a problem. And then the second, of course, is that for many people, DEI is not necessarily a term that they enjoy, right? But you still want to have some of those basic constructs like equality and inclusion and diversity. When you're getting a group of people and they're all giving their responses individually and anonymously, what you can do is you can aggregate those responses. And it's in that aggregation that you can set weights, right? If you have a group of 20 people, 18 of them are men, 2 are women, right? But everybody is equal in terms of their experience level or educational level. Maybe one thing you want to try is different aggregations of those individual responses. So maybe you weight the people who are perhaps not as well represented in a group a little bit more equally.
So Regina, I want to pull on a thread here, which is in organizations that we might regard as healthy, trusting places, maybe you need the anonymization anyway because of other predilections that human beings have, I don't know. But in organizations that are dealing with meaningful cultural issues, including trust, I think you can ask about the difficulty of implementing meaningful anonymity also. And I don't know if that resonates with any of you in organizations which say, yeah, this will be anonymous, nobody will know about it, and everybody says, yeah, whatever. In every problematic situation, that's probably what people are going to say. So we need a way to get around that box, out of that box.
Well, interestingly, and I think this goes to Gary's earlier point, which is also too, working with the Marines, of course, they don't want to inculcate an environment in which, well, this person was terrible and this person was really great. And actually, you know, when I said we get out of that completely because nobody in this room except me, because I have the master key to the platform, nobody knows who did what and who said what and how well they performed. Nobody knows that. They just know they're anonymized. I only know what I did. I don't necessarily, I know what everybody did because we hold pre-mortems and post-mortems so that we can give to people the data of what was the overall performance. So we can get quite granular on that.
It can be done in a way.
And it works.
All right, so I'm going to go to Gary and see what he has to say.
I have two reactions.
Yeah.
First of all, I'm going to go back to your issue about a designated naysayer. I'm not totally up on the literature, but the literature that I've seen suggests that that's not a good practice. If you say so-and-so is going to be the devil's advocate, that means everybody else can relax because that's the person who's supposed to speak out. And when that person speaks out, nobody knows if it's genuine or if they're just doing it because that's the role they're supposed to play. So they don't really make a great contribution. You want someone who has an honest dissension that he wants to bring up. The second issue is in the pre-mortem. I don't like to see it anonymized because one of the things we're trying to accomplish with a pre-mortem is to create a culture of candor and psychological safety where people are speaking things that they know may not be popular and it's accepted. And we start with the most senior people in the room because they've got to set the example. So there's a lot of pressure on them not to just sort of fumble it or duck out. I've never, in pre-mortems I've run, I've never seen anybody just sort of withdraw, but you work in different circles, so you may have different experiences than I do.
This is a little bit about creating a permission structure. And I think you mentioned the Marines example, where I would think in a rules-bound organization that they need for other reasons, that creating that might be tricky. I don't know if that's something that...
You know, in my experience, you know, they wanted nothing to do with exposure of who said what and who did what. The idea was to keep everything on as much of a level playing field as possible, to keep things as anonymized as possible, which is generally how I operate, you know, whether it's at the research level or at the applied level. Anonymity counts for a lot because biases are very difficult to overcome, and especially if you're in an environment where, you know, where rank matters. You know, even if I can't see the person in the room, even if I'm not, if I'm in a remote situation, if I know that somebody of a higher rank is speaking, I have not only an obligation, but also to just a natural response, you know, human response that I'm going to be deferent and I'm probably not going to say what I really think. We've seen that in a couple of situations where an officer who I would say got a lot of ribbing, you know, from their colleagues and was perceived as being, you know, the nerdier or the least well-spoken of the group. But this person outperformed everybody. And so nobody knew until about 2 years later. And that person had there was like a sea change in how people thought of that person after the fact. If it had been revealed during, probably the biases and, you know, just the organizational situation would have mitigated against treating that person with the kind of respect they really deserved.
So I think, you know, putting the things that you both have said, all three of you now, I think there is going to be work within the organization to think about anonymity, a place for anonymity and anonymity in its place, because I don't think that it gets us all the way there, but it seems essential. Excellent. Well, this was very helpful. Let me pivot to something about how organizations collectively behave at times in ways where they seem to be aware. So Chuck Prince, you know, a distinguished person, will probably be remembered for one thing at this point, which is quipping that as long as the music's playing, you've got to get up and dance. And you know, to many of us, that was an acknowledgement that the herd is going in one direction. So, you know, you should probably go in the same way. And so then the question for all three of you, I think, let me start actually with Regina, and then I'll go to Gary, is to really think about how can you develop norms that could ask questions about an industry level activity, not about what's going on inside your own house necessarily?
Well, I mean, as a researcher, one of the things that, for those of you who may have followed this, in the research world, there's been a lot of concerns about replication and reproduction of scientific experiments, that there's been a lot of falsification of data, plagiarism, and now with the advent of generative artificial intelligence, there's even more fear that results are being fudged. So one of the things that has been introduced over the last couple of years, which I think is part and parcel of the kind of work that we've been doing, is the notion of pre-registration. If you're a scientific researcher, a good researcher now will pre-register their hypotheses and their ideas about the outcomes of their researcher before they even start the experiment. There are several databases that serve as pre-registration databases, like University of Pennsylvania has one of the most well-known within the scientific community. So we always pre-register our hypotheses and exactly what we think are going to be the outcomes, even if they're not. But at least there's now, an independent third-party body that retains that information so that, I can't say 6 years later, when a paper is accepted by a peer-reviewed journal, and somehow I've maybe changed the numbers a little bit. I can't do that, and so I think that.
So, Regina, really quick, just to clarify something, is that something that you view as a solution from without to make this scientific hive work better, or is it something that you saw as surfacing somehow from the internal mechanisms of, people saying this is a ridiculous situation and we should do something better?
I think it's both, because I think if you think about, let's take the interest rate example, right? I think if you asked people just on a regular basis at the end of last year, what did they think the interest rate picture would look like Q1, Q2, Q3, Q4? And actually have people, put it on paper, put their money where their mouth is, I think that there would be a lot more tempered observation coming out in the press and in other environments, punditry, you name it. I think that there'd be a lot more tempered thinking about, well, is it automatic, that the interest rates are naturally going to drop? There's a lot of stuff going on in the world, and there are a lot of reasons why, that interest rate might not budge for a while.
Fair enough.
So the idea of pre-registration, or basically, putting your stuff, on paper, putting your stuff out there, even if it's maintained as an anonymized bit of data, I think that's useful in tempering overconfidence.
So just to bring it back to the Chuck Prince point, I am tempted to think of it as everybody says something, puts down on paper what they think is going to happen to house prices circa whatever 2005. And then that's memorialized at some point that they can go back and look at to say,
that's the idea, is you have to track the data.
Okay, perfect. And Gary, any thoughts that you have?
So the issue I'm picking up is, how do you change the culture of an organization? That was one of the issues you raised for us. How do you create an organization where people will speak out if they see something where the herd is going in one direction, they don't think that's the right direction? And so I want to do a quick poll. I'm going to ask the people here, all of you, do you think that the New York Fed should be trying to create a culture, should try to create a culture where people speak out when they see something that they think is wrong? There's 3 options for your answers. One option is yes, one is maybe, and one is no. All right, so think how you're going to answer this. Quick show of hands. How many people say no? Not a single person. I didn't think there would be. I thought it would be pretty gutsy in this audience to say no. How many said maybe? I see 1, 2, 3, 4, a scattering of maybes, wishy-washy people who aren't ready to commit one way or the other. And how many people say yes? The overwhelming majority here says yes. And there's a scoring key. And the score is, yes is the wrong answer. Maybe is the right answer. Because it's not that simple as saying, yes, we want that culture, without knowing what are we going to have to pay for it? How is it going to be implemented? What are the trade-offs going to be? How is that all going to be rolled out? What are the techniques that are going to be used? And without knowing that, I see when in several cases people are very enthusiastic, yes, we want to change the culture, without understanding the nuances and the context and the implication. I have two good friends, both of them physicians. Both of them, these were independent. They were offered the position as the chief safety officer for large hospitals. And they were excited because they were going to be able to put their ideas into practice. Each of them, the two of them, resigned after 6 months. And they had the same complaint. The hospital lied to me. They said they wanted a safety culture, but they really didn't. And so they felt that they had been betrayed. But as I discussed it with them, we realized the hospital didn't know what a safety culture meant. It sounded like a good thing. They didn't know what they were going to have to do. And so when ideas came up, they said, well, we're not ready to spend that, or we're not ready to go through that kind of distortion. And my friends were also at fault for not trying to anticipate what it was in order to have a meaningful dialogue. So it's very easy to say, yes, this is what we want, without getting into the details of what it's going to look like. That's why I prefer the maybe responses that I was making fun of before, and you took it well. So I appreciate
maybe with a pre-mortem also. Which
maybe with a pre-mortem. Yeah. But I'll give you another example, a positive example, with the Marines. In the 1980s, the Marines were reeling after all the problems in Vietnam, and they wanted to impose a different culture of maneuver warfare. And my friend John Schmidt was part of that movement. He was a young captain at the time. And he started to write what's called a tactical decision game for the Marine Corps Gazette that comes out every month. And it's like a one-page description. Here's a map, here's who you are, here's your forces, what do you do? And John never announced that this was his agenda, but what he was smuggling in these tactical decision games, you'd be given a mission, and then something would happen and would render your mission obsolete and simply foolish. Because up to that point, the culture of the Marines was, you give me a mission, I'm going to carry it out, come what may. That's my ethos. That's what I'm going to do. Right. And they needed to move away from that had gotten them in trouble. So John ran a tactical decision game like this every month in the Marine Corps for 4 years. And then after 4 years, he said, am I having any effect? So he went back to his very first tactical decision game, and he ran it again. He changed the details so nobody would recognize it. First time it was run, there was a mission, there's an assembly area, you have to march to the assembly area, take control of it, and go from there. And then as you're on the way, it turns out that the enemy is in the assembly area. And the bridge that you were supposed to be holding, the enemy is pouring. What do you do? And the majority of people said, my mission is to take the assembly area. The assembly area was useless, but they couldn't stop themselves.
I see.
When he ran it 4 years later, nobody went for the assembly area.
I guess that's progress.
They had all changed. So it is possible to change the culture of an organization, even one as seemingly monolithic as the Marines.
So that's actually a really neat example. And Evan, it made me actually want to connect back to something that I know you've thought about. If you think about organizations where people are maybe thinking they're trying to do the right thing, FIFA in particular, you've talked about revealing long periods of normalized deviance, which I guess allows people to feel okay doing crazy things in the form of bribes in that case. So, in your sense, if you think about the morals shifting within the organization and the marketplace as a whole, what do you think happened to kind of allow that? And is there a way that FIFA or its ilk could have avoided something, like this? It's a huge question, but.
Yeah, a tough question. So in my prior life, as a prosecutor, I investigated FIFA and other soccer organizations related to bribery. And, you know, there's sort of an interesting evolution of bribery within sort of international business of sports and of soccer that I got an interesting lens on, which is, you know, that we began this investigation years before the case was public. And so there were a number of years where I talked to a lot of people involved in taking bribes, paying bribes, sort of running the business of the sport, who, because they were talking to me and some agents, they knew that there was an investigation and there were issues, but it wasn't public yet. And so as I was thinking about this panel, the evolution of the issue, as I saw it, is, you know, would ask people, you know, how could this? This is one of those dirty secrets. Everyone seemed to know that you know, everyone's paying bribes and taking bribes. It seemed to have been going on for decades, and people would invariably say, "Yes, that's true." And when you start to dig and ask, you know, how could that occur? I think there was sort of a period even before we got started in our work where I think people just people were motivated in their participation in the organization writ large, in significant part by personal enrichment. And so that was sort of just stitched into why it is they got involved in the first place. Not the only thing, for sure, but you know, that was just part of it. And because there was no notion that that was clearly wrong, people did it. And then as time went on, and as you sort of insert me into watching this, as I'm talking to people in this investigation, what was interesting was that people would sort of transition from saying, well, you know, if the question is, why'd you do this for a long time? They would say, well, at first I really enjoyed the sport, and then I heard there was an opportunity, and then I realized it could get some money. And then you say, okay, what about the last few years as things have been heating up? You know, you might have been heard about what we're doing, right? You may have heard about our investigation. You know, it hasn't stopped. How come? And people say, well, you know, no one's ever been caught before. And so it seems, even if you start hearing rumblings, it seems pretty unlikely that anything's ever going to change. And there's such an impetus to continue to participate and profit from this that people kept going. And then, even after then, the case was public and people were arrested and there was on television, and the fact that there were cooperating witnesses was public. You know, people had made recordings. What was fascinating is people kept doing it, and there was this reaction where some people kept doing it even if they had paid a close attention to what had just occurred, which they all did. They would know that they might be next, and they kept going. They kept traveling to the United States, making phone calls, sending letters, having meetings, you know, talking about bribery, and then by contrast, others who had been doing it for years, heard about what happened, had no real prospect of ever getting pulled into it, and traveled halfway around the world to confess.
Interesting.
And you know, they had known for years that what they were doing was wrong, but it never occurred to them to confess. But once they saw it out there in public, realized, I just can't go on without sort of unburdening myself of what this is. So I'm not sure what that all amounts to be perfectly honest. But maybe Gary and Regina, you could help us with it. But it is a fascinating evolution, and if nothing else, it suggests that the way people rationalize their own behavior and internalize sort of the potential consequences. People have a lot of mechanisms, not just to start, but there are a lot of barriers to stop.
That's certainly a message I took away from it, is our capacity for rationalizing is powerful, and it needs checks. So I think we have a little bit of time for some audience Q&A. Just please wait for the mic runner or get to the mic.
Thank you. Daniel Beunza from Bayes Business School. So thank you for the wonderful session. So this is, I see it as the problem of drawing on collective intelligence to figure out what might go wrong. And I like the idea of the postmortems and the forecasts, but I am struck by the fact that in both cases they are both somehow a bit removed from the task itself, whatever it is. And so they are taking place, either before or in a meeting afterwards. And I'm wondering to what extent you see some possibilities for doing some of these things, this sort of like concerted imagination in the context of the activity that is itself being done. So this morning in our previous panel, we spoke about drawing on technology to use behavioral data and the fact that oftentimes there are discrepancies between different sources of data, whether it's the behavioral survey or the tool. I'm wondering in the context of, drawing on that data, to what extent you see that one might be able to build on the discrepancies or things that are unexpected to then discipline one's own imagination and think about what might go wrong?
Well, I can start off on that. I think that having a process whereby you are making a couple of basic assessments about the people within that collective intelligence. So for example, there are a couple of basic assessment scales, like for example, Raven's progressive matrices. This is basically a test where you're showing people a couple of visual elements and you're asking them to predict what is the next element that you're likely to see, right? So by utilizing some types of assessments, I can understand whether or not, before I even ask this person a question, is this person likely to be able to piece together disparate data points and put together a cohesive outcome from these things? These types of tests can show sometimes and again, you're dealing with self-reporting bias and self-selection, but still I can get a baseline, of understanding within a collective intelligence, what are some of the tendencies of the people within that group, right? I can create scales so for example, a recent National Science Foundation funded research program that I just concluded last year was looking at evaluating clinical trial transitions for new drugs. And in particular, all of the vaccines that were being developed for COVID while they were in the middle of their clinical trial phases. So by taking an understanding of the type of people who are making these assessments, we assumed we were talking to people who were surgeons, pharmaceutical executives. We were also looking at other super forecasters, people who were really great forecasters, and we were also looking at lay people. These were randomized controlled experiments, but we gave the lay people the mechanisms of data that you would expect people who are experts to automatically have at their fingertips. The interesting thing was that the lay people outperformed both the expert, they outperformed the control, as well as the experts and the super forecasters. Why? Because they had different training, they had different data at their fingertips, and they were being given a system to follow, right? So understanding something about that group, we knew that these were not people who came from backgrounds in which they were, biotech executives or pharmaceutical executives or doctors. They just had an interest in the subject matter. They had a curiosity, and that was expressed in the psychometric assessments that we did. So we were looking specifically at the people who were expressing or self-identifying as particularly curious about the subject, not that they had either professional or personal experience. Those people performed very well. And the more we started to look at that over time, over multiple years, the more you could start to detect patterns. Right? You have to be careful with, looking at the data just once in a while, because somebody can get lucky, they make a good decision once, but by looking at it longitudinally over time, again and again and again, you're avoiding that regression to the mean. You're looking for people who consistently show a preponderance towards a certain type of outperformance. And that is all possible within a very particularly, it's an articulated system, but it's doable. And we keep on testing that, humans versus machines, human hybridized machines. And that's an important thing I'd like to surface as well, which is that much of my work is in human-machine interaction, and specifically looking at humans versus machine models, or human and machine hybrids versus pure machine models. And in almost every single experiment that I've done, humans win. Humans win. The right humans, but humans win. Humans always outperform the model.
I want to get to a couple more questions if there are, but next year our overlords attack us in a year or 2 years from now. We'll come back and revisit this topic. Yeah, go ahead, Gary, real quick.
So I'd like to quickly respond. So I don't think Regina has given a proper description of the real power of super forecasters, because the research, whether they did all that well in that study, they're really a marvelous cohort that gets carefully trained and prepared in order to make more, and statistically shown, they make more accurate predictions. However, within an organization, when I have looked at surprises and accidents and unexpected events, almost just about always, there was somebody inside the organization who saw that there was a problem. And I think one of the difficulties with this panel is we put the pressure on the people not raising their hand, and we're ignoring the other part. When people raise their hand, how are they listened to?
Right, sure.
And that's another part of the culture of the organization, not to listen to everybody, but to take advantage of the intelligence and the sophistication within the organization. I think it's one thing to talk about establishing policy. I think it's important to move from policy to practice. And that I think could be very helpful.
Very helpful. Other questions?
So I'm curious what the panel thinks about whether there's any tension between a culture of imagination and a culture of integrity, because it strikes me that maybe there are particular traits or norms that you would see in a really strong culture of imagination and creativity and innovation that might be at odds with one of integrity. Just curious about what you think.
So the research, imagination, curiosity, we all resonate to those things, but the research suggests that someone who comes up with innovative, unexpected ideas, people discount it because people distrust creativity and distrust novelty. And organizations that I've studied almost always say, we want innovation. But you look at what they do, and they're afraid of innovation. And insights are disorganizing. And if you're running an organization, an insight is going to require you to make all kinds of changes. And so there's a real barrier within organizations to listen to insights and to act on them.
I totally agree 100%, and I've seen this over and over and over again, because I also come from a corporate background in addition to working in think tanks and everything. But I think that is precisely the reason why having a system, having a process, whereby you can mitigate some of those problems, where there is a natural aversion to novelty, and yes, everybody wants innovation. But to implement a system whereby innovation is maintained as a paramount objective, that is virtually non-existent in almost every single organization. I've worked for Sony, I've worked for Liberty Globe, I've worked in corporations that take innovation as part of their pride, and yet these are some of the most hidebound organizations in the world because they have existing systems, that if you want to change that system to facilitate an innovation, there are going to be a million barriers you're going to have to cross in order to get to that, and that is difficult.
And so the work continues. And with that, we bring to an end this session. Thank you very much, panelists.
Thank you.
Audience.
Thank you. Thank you. You did a great job as moderator.
Yeah, thanks so much for that. Tony has reminded me that we actually did a pre-mortem for this conference as well. So we'll have to just judge later how well it worked. I think we want to take a look at the answers to the second poll question. Is that going to come up? So I guess my takeaway from this would be, good sign that almost 60% have an approach to culture and behavior across the firm. Much lower on scanning outlier teams or areas of focus. And I think one thing we've discussed today is that culture is very local. And maybe that's sort of one thing we haven't focused on enough, on how important that is, whether it's a good silo or a bad silo or whatever it is, just even down to the team level. And then I think probably a lot more progress to be made on including behavioral science and behavioral analytics. So our next segment features a conversation between Susan and Raymond Dorado. Ray is the Senior Deputy Superintendent for the Banking Division of the New York State Department of Financial Services. Prior to joining the DFS, he held executive legal and business positions at a range of banking organizations. So I'll turn it over to Susan to get the conversation started.
Hi, everybody. You're not done with me yet. I'm not gonna grill Ray on how he thinks about accountability, but we are going to talk about a bunch of things that are going on at the Department of Financial Services here in New York. They're doing some really exciting stuff, and we're going to dive right in with a new guidance that they put out in January of this year after comment last year, and it's their character and fitness guidance. And as a lot of you I know, there are fit and proper regimes in the UK, at the FCA and elsewhere, but there really aren't a lot of these here in the US. And so I wanted to start right off asking Ray to tell us about the guidance and then kind of what precipitated putting this out.
Sure. Well, thank you. And thank you very much for welcoming me here. What precipitated it was over the last couple of years, we had noticed within the industry that there were varying degrees of processes around character and fitness. So a lot of organizations had their onboarding requirements, and they vetted their executives and their board members for onboarding. But after that, it was sort of one and done. So we we started to talk to some of the better, the firms that we thought were had the better practices, and most of those had refresher type processes. So we wanted to bring an across-the-board approach to have a refresher or a reassessment of executives, so there was some appropriate level of review from time to time. So that was how it kind of got started.
And so let's talk a little bit about what's in it, because you hear character and fitness, and that sounds like you're delving into someone's psyche to decide whether or not they're a good person. So
Right.
let's talk about what we really mean by character and fitness.
Sure. So really maybe a little primer on what the guidance is about at a high level. It really is applicable to board members, senior executives, and managers, really all the folks who make policy within organizations. And the impetus was really to have, in addition to the vetting that goes on when those individuals take on those roles, that there be another assessment periodically of that same individual as they continue in the organization. And the areas that the guidance goes into are really the issues that executive has been subjected to in their roles, say in their prior organization. So was there a regulatory proceeding? Was there a compliance proceeding? Was there supervisory action? Was there a receivership or a conservatorship where they were actually a senior person in that organization? So these are things that should be delved into. In addition, issues that come up within the firm itself, what has come up in that organization, and then outside of the firm, what has gone on in that person's individual life. Have they had financial problems? Are they taking out? Are they highly leveraged? Do they have a lot of other issues? Do they have social media issues in their life that are affecting their management? So these are the types of things that we were concerned about, and I think touch upon those types of things in terms of giving sample questions that institutions can ask when they're vetting their executives.
And is the principal concern about reputation risk for the firm, or is it about how that person is then leading the rest of the organization, the impact on the culture?
Okay, it's a good question. It's a little bit of both, because you have both the issue of the safety and soundness of the organization, you have the reputational risk of the organization. These are significant issues for the organization as a whole that one individual can have a significant impact, as we all know from our experience in the industry and as regulators. And then in terms of the actual culture of the organization and the individuals who are supervised by that individual, that they get the sense that the organization is tolerating possibly this bad behavior, or it's going unchecked, that there are no consequences for that executive, that this can perpetuate for long periods of time. So it's really for the organization to take charge of the situation and to address it as they deem appropriate, unless it's beyond that, that it becomes some sort of a regulatory or law enforcement matter. But generally, these issues are managed by the organizations themselves.
And so when you look at sort of the FCA's fit and proper regime, one of the things that they focus on, which is not, I think, a part of yours, is competence and capability. Is there a reason you chose not to kind of focus on this? This seems to be a much more kind of vetting regime, as you talked about.
It is. I think that we look at the competence of the individuals for the organization as something that they are fully capable of handling, and there are other requirements that they have to satisfy there, so we're not trying to be redundant. I think we tried to delve into the area that wasn't addressed. And that's really kind of where we ended up on this. And it is relatively new, as you mentioned. We just published the guidance sort of mid to late January of this year.
So you don't have any results yet to tell us?
No results yet. I think that the way we look at it is, we expect that our examiners will go in the not too distant future, and will, in their exams of our supervised institutions, will be looking at their policies. We've given, in the guidance, we've given a lot of questions and ideas in an appendix to help organizations tweak their own policies. I think that what we found is that a lot of the larger banking organizations had pretty sophisticated character and fitness policies and processes, and some of the foreign banking organizations do as well. So the policy does address the fact that foreign banking organizations, if they have a home country policy in place, that they have that in place in their office, and that be consistent with what we've got in our guidance. Because we do regulate about 60% of the foreign banks operating in the United States.
And to be clear, when you're conducting these reviews, there is opportunity for remediation. It's not like you found something bad about somebody and hit the road.
Yeah, no, I think there are two, that's a good point. There's a lot of discretion in the policy, first off, in terms of timing. So there's no requirement that it be on a certain cycle, but I think we expect to find that there's a certain cadence to the refreshing of the reviews. And there is a reporting requirement in the policy that also requires the institution to report on a designated individual to DFS if they have taken the person out of a position, they've moved them into a different position, or they've taken away responsibilities as a result of findings in their vetting process.
Great. Well, we'll be looking forward to hearing more about how this goes and the results that you're seeing.
Okay.
So stay tuned. Watch this space. Okay, so now let's turn internally. And we know, unfortunately, very starkly we know right now, that regulators themselves are not immune to culture problems. You can draw your own conclusions from that one. But you guys at DFS have done some really remarkable work at looking at your culture internally and making some changes, even starting with your refresh of your agency mission statement. So tell us about kind of what precipitated those changes.
Sure. I think that it really was when Superintendent Harris joined, we did a bit of a restart in terms of looking at the processes we had in the organization. And what where we have ended up in terms of strategic planning is focusing on what we like to call the 3 Ps: process, people, and policy. And so maybe just to give you a little idea of this is kind of just a different way to change a culture. But we looked at, what is policy? Well, policy is really looking at a policy approach to how we make determinations and outcomes, really to be very data-driven and findings-driven and not be ideology-driven. So if there was any lingering, views in terms of ideology, we really everything has to be supported by data. That has actually been very helpful and constructive in managing various issues like the current, the ongoing banking crisis that started last year that still seems to be lingering. And how we go about, assessing a institution's liquidity and how do we get into the data points on that. Another area is people. So with people, it's really about changing, the way I think we feel we're viewed in the industry and trying to attract the right types of people to the organization. So bringing in the right talent levels, people who have the right backgrounds, going out and hiring a chief technology officer, try to re-up the technology that we use in the organization, and developing more, say, client-type management systems for our institutions so that we're tracking them in a more systematic way so that managers can actually observe it. And I think that's gotten the folks sort of who have been in the organization for a long time to be more accountable in the organization. And it's actually elevated them in the organization. They're now, those who really want to participate in the process are participating. So the technology has helped, and it's an ongoing process because we have a long way to go in technology.
So how do you want to be perceived externally? You said you wanted to change how you're perceived. How would you like people to perceive the agency?
I think that we want to be viewed as an innovative supervisor, and we also want to be a fair-minded supervisor. So we have like all of our fellow states and the federal agencies. Safety and soundness is foremost. Consumer protection also as important. But I think we wanted to be change the approach of the organization to be more collaborative, more outwardly focused. So collaborating with our fellow federal agencies, also addressing our legislative, the elected officials in the state, and making sure that we're addressing their issues and responsive to them, and communicate with them. And then really, our own institutions, making sure that we're reaching out to the institutions, we understand where they stand, and if we don't know something about a certain organization, then there's a lack of communication with that institution, if it's only just exams. And then finally, taking the temperature of the consumer advocates that are out there that always want to have a meeting with us, but we have to manage that process effectively so that it's used for a particular purpose that it's there for. So those are things that we've tried to change in the organization.
And how do you, the question came up earlier, trying to drive innovation sometimes can also lead people a little bit more towards some sketchy borderline behavior because you want to sort of foster creativity. It's not necessarily driving towards sort of thinking about compliance. How do you think about balancing innovation and obviously a compliance culture?
Well, I mean, if you're really talking about in the way we regulate organizations, we have a significant portfolio of technology companies, virtual currency companies that we regulate, and sort of the other division of DFS. But that has actually had an influence on our banking activities. So we're very much tied at the hip to the virtual currency group. They have their own, applications group, just like the banking applications group. And I actually sit on the virtual currency applications group. But where their interconnection has occurred is really with third-party third-party risk management. So for banks using fintech organizations, they bring a fintech into their organization, and in addition to the core processors, the fintechs don't have the same sensitivities, need much more management. And I think our focus has really been for our banking institutions to see what kind of risk management they have in place with respect to those fintech businesses. And really the standing guidance is from the federal agencies, like the 2023 community bank guidance by the interagencies, as well as the proposed guidance from 21. Those are really the driving force for that oversight. But in particular, when it comes to the virtual currency activities of our banking institutions, we actually do have guidance out on that, because we found that there was some confusion in the industry. We wanted to flatten that so that banks actually understood that they had to seek the approval of the superintendent to engage in virtual currency related activity. So it's a provision in Part 200 of the Financial Services Act of New York State, which even a number of lawyers kind of missed when they came in arguing with us about the issue years ago. So we issued guidance in 2022, and we've really developed a lot of process around it. And the guidance is pretty clear cut. We expect that the institutions will come in with a business plan, we'll lay out all these issues on the line. And I think from our experience, informed by our virtual currency activities, a lot of the same players that we regulate on the other side are often involved with the banks when they come in to do virtual currency related business. And mind you, the banks are really involved more as in agency capacities, as agent, as cold storage custodian, in very limited ways, not as active market participants.
Sure. Now, one of the things you told me before about how you thought about culture, how you and Superintendent Harris thought about culture, was trying to take your reviewer lens and turn it on yourselves. So tell us a little bit more about that. This is the way we examine people, now we're going to turn the lens on ourselves.
Right. So I think that really in terms of our own culture, it comes down to a few things that we try to strive for. So really equity and resilience and transparency. And if we're expecting our regulated entities to live that life and walk that walk and not just talk the talk, we have to do it ourselves as an organization. And I think what we've strived to do is we've strived to focus on our education programs, on our own, I would say, recruiting efforts to bring in the talent into the organization. I think we found that we had an aging examiner population. We needed to bring in some more talent to augment that. Those folks may be retiring soon, so we have to be resilient. We need new expertise. We need folks who are conversant in cyber, in digital assets, in areas that some of the long-standing examiners don't have as much expertise. So we've really gone out and we've hired a lot of people. So we've hired people, we've promoted the talent within, we've tried to build that intellectual capital within the organization so that we have more talent in the organization. And we recognize the fact that there are headwinds to that at a certain point in time, so we've been moving quickly before budget type things change. But so far, it's we've been pushing ahead as fast as we can.
And that's one of the ways you think about resiliency, right? As a talent, and you're doing succession planning and some other things.
That's right.
Like that too.
That's right. Yeah, and I'd say I think that what I see as a difference, and maybe this is something you were going to ask me, but as I see as a difference between the private sector and government is really we're at a disadvantage when it comes to hiring because we can't pay up the same levels of compensation that you can in the private sector. And we also have an incentive performance issue. While we evaluate folks, but we can't necessarily pay for performance like you can in the private sector. So where we can be effective in competing, however, is really in the area of promotions and also giving people very interesting assignments. And I think that the perspective that they get within the agency of looking at a broad swath of activity from varied financial institutions with very different business models is unique. So that our hope is that those folks will grow from that and develop, and that also attracts some of the talent in from the outside. And there, maybe the next point that brings up is the revolving door that occurs. So that also affects culture. So there is a revolving door. I think it comes in waves, depends where the market is, what's going on in the banking industry, and what's not going on in the banking industry as to whether or not the talent migrates in our direction.
So is that bear market talent flows into regulators, bull market
pretty
talent?
Pretty much from my observations, both from prior to coming into the agency and now being there. I think generally it's a good thing. I think that getting that input from the industry does help the agency. I think it keeps us more current. I think it provides more sort of the corporate management style that actually is good for government to embrace. I think it also helps inform the agency about the realities of the corporate side, and I think it also informs our enforcement division. They kind of understand a little bit more about the dynamic of the governance of an organization when they have people who are more freshly in from the outside who can tell them kind of what's going on in the boardroom.
They know where the bodies are buried.
Yeah, exactly.
Yeah.
Not giving up any confidential information, but basically from their practice, they kind of know what's going on there. And then I think we lose talent because the industry will take those people as a regulatory regime that changes. They want the talent, and we provide the regulatory schooling, so to speak, to let those folks move into those lucrative jobs often.
Sure.
Yeah.
So you had a long, distinguished career in industry and have only recently come to the other side. What has surprised you most about being on the regulator side?
Yeah, I would say that sometimes it's the assumptions made by folks who have only worked on the government side, that they have maybe a misunderstanding or misapprehension of the reality of the financial institution and how it actually operates, and that their resources may not be unlimited, as despite the urban legend to the contrary, that they're good at financing things, but they have limitations in terms of what they can do and how they can do it. It is, I think, what I think that I recognized is that the institutions are all looking for certainty at the end of the day, and we have to give them. If we give them more certainty, they will respond better. They will respond more actively to, what we're trying to get them to do, what we're trying to motivate them to do, or if we have them under, consent order, or we have them under, an MOU or something like that, that they tend to respond to certainty, and that's something that I don't think that some regulators fully had appreciated that. So.
And is that part of, when you talk about transparency, is that part of the goal of transparency that you have?
That is part of transparency.
So what other advice do you have for this audience in terms of driving cultures, whether inside your own organization or as a regulator externally? What would be the big takeaways you'd want to give this audience?
Okay, well, I think that, for one, I think that institutions should pay attention to their remediation efforts, what they've got to do as a result of an exam. Fix all of your old problems. There are always going to be new ones, but really address that and make it important in your organization that folks know that it's important to fix that stuff and move on from it.
Do you find that there are a lot of people who are not fixing stuff?
Yeah, if it continues, if if it kicks over cycle to cycle, it shows a culture. It shows that it wasn't important enough to
But
address.
you're seeing evidence of that.
We're seeing evidence.
Yeah.
Well, we're seeing evidence that I think post the initial run of the banking crisis last year, we see a lot of institutions that are really moving aggressively forward. I think what came out in the studies on that is that there was a lot of chronic kick the can down the road syndrome at a lot of organizations, or they hadn't prioritized some of the significant issues that had been identified. And I think it falls back to the supervisor to make sure that that message is being delivered to the right people and as effectively as it can be. So I think addressing those issues and making it a corporate priority. I also think attention on a more granular level, attention to compensation issues for managers, that as a criteria. I know a lot of firms do this, but as a criteria to basically assess managers in terms of their attentiveness to compliance issues or their inattentiveness to compliance issues. It makes a difference, and it's a cultural issue that kind of trickles downstream within the organization. Those are significant issues that I think go a long way to building a better culture. And then I would say, finally, get to know your regulator and let them get to know you. So don't just go to your regulator when you have a problem, when you're making a disclosure or you are negotiating an MOU term or whatever. It's better to go in periodically with actually just progress reports on things, what you're doing, what initiatives the organization is doing, and get to know the organization, get to know the supervisor, and they will get to know your organization, and they will see what you're doing. It makes a difference when you have those problems that there is some credibility already established in the communication process. So I would encourage that activity, because I think when it gets communicated back, those meetings get communicated back to senior management or to the board, it does have impact on culture. It actually helps the organization digest, understand what the expectations are.
Great advice. Thank you so much for being here with us today. You're going to get mobbed on the way out so everyone can meet you now.
Okay.
But thank you all very much. Thanks, Ray.
Thank you. Thank you.
Thanks so much, Susan and Ray. Okay, thanks so much. I'd now like to introduce our final segment of the day. We're joined by Hannah Schoenberger, Editor-in-Chief of American Banker, who will lead a conversation with James Gorman, Executive Chairman of Morgan Stanley. In addition to his long career at the top of one of the largest banking organizations in the country, James is also a speaker at our very first Culture Conference in 2014. So I'm especially looking forward to hearing from him about what he's seen in the interim, and perhaps even more to hear his thoughts about the future. Please welcome Hannah and James to the stage for discussion.
So thank you for coming. And we met for the first time just now. You saw it, so. So you spoke at the very first one of these conferences. You were on a panel, and at that point, the former New York Fed President Bill Dudley said, "The industry is not close to where it needs to be in building a culture that respects law, regulation, and public trust." So some of the issues that were discussed at the first conference were increased pressures for short-term returns, employee mobility and turnover, increased institutional size and complexity, which sounds a lot like the Basel discussions we're all having right now. You've been doing this for 14 years, and now you're in your next chapter. What do you see as what's different now? What do bankers care about now that they didn't care about then?
Well, Hannah, nice to be here. And I remember that conference, and I remember what, it was Bill Dudley, right? And what he said. And he also said that he wasn't sure if it was a case of rotten apples or rotten barrels, which I think it was a fulsome comment. I will say that. The world has changed enormously. We could talk about it for days, but I think the industry was coming from a sort of loosely regulated, hyperbolic, extreme levels of activity and excess. Obviously, the financial crisis kind of put an end to that because it found all the weaknesses that lay in institutions and wiped out a significant part of the industry, and those that weren't wiped out became banks. So the regulatory oversight changed dramatically. When Bill spoke, it was still, the financial crisis, I think, was still very raw. I think the scar tissue probably only really started to recede maybe around 2018, so 10 years later. And then, of course, Silicon Valley, and the previous panel were talking a little bit about First Republic, Silicon Valley, Signature Bank, and how it all sort of started again, although I have strong views about that crisis. So I think, what's changed is time. Time heals. The weakest were wiped out. The professionalization of management was a major advance in the industry. There had been, an industry which historically had been built around whoever the best producers were, and that they may also be the best managers, but not necessarily so. So I think there was a change in understanding of what it took to manage a complex financial institution. And those of us who lived through that crisis, which I did, never want to see another crisis like that again. So we had a strong sort of moral incentive, not financial, but moral incentive to ensure it didn't happen again, because it nearly sank the whole economy. So there's a lot we could talk about it.
You said you have strong views on the crisis of 2023. Tell us what your strong views are.
Well, it wasn't a financial crisis. It was three banks who, frankly, were mismanaged, and it was three banks in crisis, not a financial crisis. They got themselves in that position for very similar reasons. They had very concentrated pools of depositors who could move very quickly. One of them had a lot of real estate depositors, another a lot of private equity, and the third a lot of venture funds. And they presumed duration on those deposits, which was not something one can presume. They didn't hold sufficient liquidity to manage that risk. And the surprise to everybody was the deposits moved so quickly. That wasn't very surprising. They were highly concentrated around communities who talked to each other a lot. So it was what I guess you call in soccer or football an own goal. I mean, it should never have happened. They were obvious sort of rookie mistakes that should never have happened. And but most mistakes when they turn up seem like rookie mistakes, and you learn from them and you move on. But the reaction to that among some in the regulatory community, and probably some people in this room, was there isn't sufficient bank regulation, which I thought was ridiculous. I mean, that's not, it's like saying, I gave this analogy to a senator, which is like, say you're at University of Alabama and one of the intramural football teams screws up, and I don't know, they're spending money wastefully and they have to fire their coach and they do all sorts of things, and your reaction is to go and punish the university football team that plays in, national events. It's like, no, they're unrelated. So I think the bleed through from a crisis of three banks into a presumption that there was some sort of financial banking crisis, and therefore the response needs to be to ensure that, that doesn't go further. I just disagree with it.
So if you were a regulator, you're one of these folks, what would you do? To make sure that small banks like that don't fail again, or don't fail for that reason?
Well, unfortunately, we've got a financial system which presumes that you can have the same safeguards, and I can say these things because I'm at the end of my career. You see.
Yes. That's why they invited you.
Well, but the media's also here, so I got to be a little tempered.
Well, that's me. I'm the media.
There is a presumption that an extremely fragmented banking system is a good idea. That presumption holds in one country in the world, this one. Nowhere else in the world does anybody think that's a good idea. And you know, there are sort of 4 tiers of banks in this country. There are thousands of community banks. There are a very small number of SIFI banks. There are some sort of hybrid investment banks, SIFI banks like us. And there are a bunch of regional banks. And the problem with this industry is it's very expensive to manage, as we just saw, you know, the discussion around how you train, how you develop, how you bring talent in, how you ensure you have the right, you know, compliance and controls and functions. All of that stuff is expensive. So by definition, you get no scale if you're a very small institution. So the smallest institutions struggle with that. They can't possibly have the same kind of cyber capability that institutions like ours have. So they become the weakest link in the financial system. And you know, there's an argument for community banks because they serve their local communities. One bank branches, you know, one branch banks. Like I used to had a place upstate in Millbrook, New York. There's the Bank of Millbrook, has one branch, and it serves the community there very well. But as soon as you start straying from that and become a multi-branch institution, you don't know everybody who's sitting there. You don't know every client that you have like you do in a small town. You suddenly have to know and manage a business where you can't touch the people. And the only way you can do that is through technology, and you have no scale to adopt the same technology that big people have. So by definition, you have a level of risk in the system which is just unsustainable, which is why this industry has been consolidating and will continue to consolidate for years. It's inevitable. I mean, it's not like it might happen, it will absolutely happen. And you'll end up with, I think, 2 financial systems effectively, very, very small community banks that will maintain a very local town presence, and because they know all the clients, the deposits, and where their loans are going to, they have a real understanding on the ground of what's going on, and very large institutions of which, you know, we're probably, you know, if we have 4 mega banks, the traditional banks, there will probably be 8, you know, and it's sort of inevitable. It's not like you can't. There's certain industrial logic. You can say you don't want it to happen, but wanting it to happen is different from what actually will happen. And the barrier to it, of course, is whether regulators and the political community think it's a good idea. And emotionally, it sounds good to say, let's have lots of small banks. Practically, it's only good if they're viable.
Well, good point. So basically, this is an argument for taking the entire middle layer, consolidating it into a couple of...
Well, it's been happening.
Yeah,
I mean, look at Truist. It's an example. This is inevitable. It's been happening, and it will continue to happen. There's, you know, all of these institutions. And it goes back to the Federal Reserve System. The Federal Reserve System is built around 12 districts. I mean, why do we have 12 districts now? I don't know. Doesn't actually, I wouldn't. If you were God and you came down and designed a Federal Reserve System, nobody in this room would create 12 districts, right? Would you? Maybe you would. Why you would? Why do you need 12 districts when you don't have large banks in those districts? So it's a function of the original charter of the Fed and its purpose to set up regional banking strength to support regional economic communities. Well, that game is over. So just as the banks have consolidated, ultimately the regulatory profile will consolidate around something that is more tied to the task that they're required to do, which is to manage against the institutions that exist, not institutions that used to exist.
That's an interesting vision. Okay, so...
Don't worry, I'm not going to work for the Federal Reserve.
I don't know if anybody is, how many people are going to agree with you. Okay, so yeah, the financial sector has changed considerably. What does this mean for culture? So you run an institution where you've done a number of very big acquisitions. You've had to integrate a number of different firms into one. What is that like?
Well, hopefully if you're doing acquisitions, you have a pretty good sense of the culture of the institution you're buying before you do it. Because if something is going to be culturally damaging to us, we would never do those deals. And we had plenty of institutions we've looked at. I've now moved out of my office. I had a chance to go through about 25 boxes of files. And I must have looked at over 100 deals while I was CEO. And we did 5. We bought, in a staggered acquisition, Smith Barney. We bought a very small credit asset management shop on the West Coast called Mesa West. We bought Solium, which was a workplace business in Calgary. We then bought E-Trade and finally Eaton Vance. So we were the biggest distributor of Eaton Vance's products, so we knew them very well. We competed against E-Trade. In fact, we tried to buy E-Trade 3 times over the last 20 years and finally got it done. So I think I knew that institution really well. Smith Barney was doing exactly the same thing our Dean Witter business was doing. Mesa West was just another portfolio management, in that case a credit, not long-only equity like much of our business, but similar. So really Solium was the only one that was sort of outside what I call a natural line of sight. And we had, with Solium, we'd actually outsourced our workplace stock plan business to Solium because we'd done a poor job managing it, and they had what we believed to be superior technologies, like 300 software and programmers there. And we liked it so much we ended up buying the company back. So it was like, well, you don't remember, but you're too young, but when I grew up, Victor Kayam used to run these ads for...
Try before you buy.
What?
Not just the president, but also a customer.
No, he said, no, in the ads, he came out and he said, it was about a razor company. He said, I like the razor so much, I bought the company. Still remember Victor Kayam. His son is my neighbor, so it's kind of a strange world. Anyway, that's a little factoid for you all to go home with.
New York is a small town.
New York is a small town. It's a bit like Millbrook. So we liked Solium so much we bought the company. My point of saying all of this is we knew these businesses well. So if you do a deal and you don't understand the culture and the values of the institution where it can damage you, then shame on you. And the test of doing a deal is not to buy companies that have a culture that will make you better. That's nirvana. You can get lucky, but that's really real luck. It's to buy companies that don't damage you, that at a minimum are neutral culturally. And over time, the employees, they self-select, and some of them just say, it's not my kind of place. I don't want the culture of a big, excuse me, in this building, but regulated bank. Well, I say to them, well, guess what? We are a big regulated bank, and that's not going to change. So if you sit here and complain to us all day about regulations, you should go and work for a non-regulated bank. That's who we are, and we're not embarrassed by that. We don't hide from it. That's who we are. We embrace it. When we bought E-Trade, they were very worried because they only saw me wearing a suit and tie because I basically sleep in a suit and tie.
You don't sleep. We know you don't sleep.
Well, a little bit. And they said, well, does he ever wear jeans? Was the main question that came through on my first town hall I did for them. That was literally the main question. So we were doing it by Zoom because we bought them during COVID. And I said, no, a lot of you are worried that I never wear jeans. And I stood up at my desk, I was suit and tie, but I had jeans on. And I said, I don't care if you wear jeans. I care what your values are as people, whether you would do the right thing. I don't care if your dress code in Georgia, where the big call center was, is not important to us. What's important is values. So culture at its heart is, do you embrace a certain set of values and share them as employees?
So yesterday we had that very interesting bit of news out of the FDIC, which brings up the question of culture at a big organization. What can regulators do to sort of stop that from happening?
Well, I don't know that I can or should comment specifically on the FDIC, but it's the problem which is endemic to any institution. You can be the U.S. Senate, where people go to jail. You can be president or former president and, be in court. You can be, famous athletes, and it turns out you're actually cheating and doping. So the celebrity or the status of the institution doesn't give you a pass on having good culture or bad culture. And you can be a bank or an investment bank and have terrible culture. So I think it's a reflection of the reality that you don't deal with institutions when you talk about culture, you deal with individuals, you deal with real human beings. And human beings are deeply flawed. You know, we all have the capacity to do good and do evil. That's why there are, criminal justice systems. So I think for regulators, it's to acknowledge that this is hard to manage behavior of individuals is really hard, and you need to be constantly looking for outliers and cutting them off and reaffirming your core values. So I don't think it's any easier for Morgan Stanley or harder than it is for a regulator or any government body or any university, any large institution. They're hard.
So one of the big issues in American society right now is trust in institutions. It's endemic throughout all of the parts of our civilization. What can banks do to keep or even restore public trust, and that might lead to less regulation or less pressure from your regulators?
Well, I don't know there's a direct correlation between trust and regulation. Regulation should be driven by what it takes to keep institutions safe and sound. Right, that's the mandate, is safety and soundness of the financial system. So I think that objective is somewhat related to trust, but not entirely. How do you build trust in institutions? You do the right thing. The more big screw-ups you have, the less likely people are to trust you, whether you're a politician or you're a banker or you're a regulator. So the first order is to clean your own house. I mean, when we came out of the financial crisis, I don't think anybody trusted the banks, and we were one of the last ones to have sort of survived. We were in jeopardy. We were very fragile, very frail. So part of building trust was simply to demonstrate that we weren't going to be fragile. We're going to be stable. So when people got up in the morning at the Federal Reserve and worried about institutions, I did not want them worrying about Morgan Stanley. I wanted them to think, okay, they may not be great, but they're fine. I wanted to go from fragile to fine to good to great and sort of work your way up that progression. So part of building trust is don't be the problem child in the class. Contribute to the community that you're in. I sat on the board here for 6 years and sat on the FAC for 4 years and chaired the FAC. That's work. Right? I didn't have to do that. I turn up at these conferences, I don't have to do that, but I think it's respectful of the community that we're in. We're all in the same mosh pit. We're all trying to do the right thing, so why not work together rather than just say, you're regulators, you're bad, we know what we're doing. No, let's work together. And I think the more you can embrace those whose livelihoods are to make sure that you're safe, the better off you'll be, rather than fighting them. Doesn't mean you agree, right? You can forcefully disagree, but do it with respect, and that's how I think you build trust. Building trust with the public, if you're a bank, that's, I don't know what the American football thing is, but it's like a long throw or something, a long pass. It's hard. I mean, universities don't have a lot of trust right now. Congress certainly doesn't have a lot of trust. The media doesn't have a lot of trust. So the banks, at least relative to those groups, is looking pretty good at the moment. Who knew?
So one of the things we were talking about earlier today was accountability and norms of personal responsibility within firms, getting people to do the right thing because they feel that they should or have to. And one of the topics we were talking about was compensation. This is a perennial topic in financial services. How can you motivate employees at a bank in ways other than their comp?
Well, if you're only motivating people by comp, you're going to fail.
Right.
So I think, you motivate people by mentoring them, developing them, promoting them, giving them opportunities, giving them interesting work, creating purpose in their lives. Compensation is just one element of that. You can always move to another institution for more compensation. Many people can. But if you give up the collegiality, the sense of purpose, what's the point? So I've never felt compensation should be the be-all and the end-all. It is, however, a competitive industry that objectively is highly compensated, so you have to be competitive. But if you're trying to win just by compensation, that's hard. You disproportionately attract certain people who are only motivated by compensation, and that will eat into the culture of the institution.
How do you get young people, the folks who are graduating right now, to come to a bank? How do we get them to the smartest ones to want to come in and be bankers?
Well, I'm not sure you want all the smartest people in society wanting to be bankers, honestly.
Because right now they all want to work for Google. Or the number one thing is, can I be a product manager at Google?
There are plenty of smart people in this world. I went to a huge public university in Australia, and I went to a big Ivy League university in the US, and there are plenty of smart people in my university in Australia. The world is not defined by, there's this assumption there's some limited pool of talented people, and if we don't get them, it's ridiculous, right? I don't say you're ridiculous, I'm saying that presumption is ridiculous. There are, you don't need to get all the brightest minds, and many of the brightest minds would be very ill-suited for what we do. You know, you want the brightest minds trying to map DNA, you want the brightest minds trying to figure out how to, you know, if we can explore Mars or not. There are a lot of things you want the brightest minds on. I don't want them as a citizen or working in banks. That would be a disaster. So you need people to be bright enough to do the work. Then, which by the way is not, it's not that hard. I mean, it's not. Is it?
I guess it depends on what specifically the job is.
Yeah, but show me a job in banking that is really complex, and I'll show you a more complex job outside of banking. That I'm absolutely positive of. So I think for young people, they should be motivated by what gives them purpose. And the world of finance is very dynamic. It's very interesting. It's integral to the way the global economies function. It's integral to the way societies grow and succeed. You're working with smart, dynamic, challenging people. You've got lots of changing landscapes you've got to deal with. Those are the elements that I think make it exciting. But I wouldn't, if I went to a college class, and I speak on campuses quite a bit, I don't want all of them to pursue careers in banking or investment banking. I think that'd be terrible for society. But for those who are interested in what banks do and the complexity of the financial markets, great, sign up, we'd love to have you.
All right, so what's some of the best advice you've received about how to build a good organizational culture?
I'm at the point in my career where I don't get much advice, unfortunately. It's why I had to get out of the company, because you start knowing everything. I think I have a rule for, it starts at the top in an organization. Firstly, as a leader, you have to have a set of values, and you have to be authentic in the way that you live those values. You should be the same person sitting on a stage like this, talking exactly the same way as I do with my many siblings at home in Australia, as I do with the doorman in my building in the morning. I don't have a different set of values based upon a hierarchy or title. And if you evidence that enough and people feel that, then everybody feels like they belong to your institution. Rather than you included them, it's actually, once they're inside, it's their institution, they belong there. And if you demonstrate that you have no bias about gender or sexual orientation or ability or disability or race or color of your skin or anything, I don't care. I care about people who are trying to do the right thing and want to work with others to get the best outcome. So if you can establish that from the top, then with your operating committees, what the organization will say, they might say, well, okay, well, James behaves a certain way, that's great, but look at the other people on the operating committee. So our criteria for that was what I called the 2 C's. They had to be competent, which I put them, meant they had to be in the top 3 capability in our industry for their job. So I wanted anybody on our operating committee to be regarded as sort of a top 3 player. But secondly, they had to be collaborative, which meant they had to be able to walk in a room, have a strongly felt view, and express it in a way that didn't upset everybody else. And listen to strongly held views, listen to each other, something unfortunately we don't do in politics these days. The other person who we disagree with is a bad person. Well, no, they just come with a different viewpoint. So I've tried to build a culture where each group is based around a combination of competence and collaborativeness. And if enough people see that in your organization, and we'll get some things wrong, we'll promote somebody, the wrong person, who we don't really understand that they're actually, have engaged in some toxic behavior, or we'll miss promoting somebody who's a great builder of culture and a mentor, and over time. But as a group, we eventually get it right. And over the long haul, you have to see how an organization evolves and adapts, and how that sentiment from the top bleeds through to everybody. Tell you one thing we did during COVID. This is an example of culture. We guaranteed everybody their job during COVID. A couple of other banks said the same thing and then didn't actually follow through on it. We said it because I came to work one day and I thought, of all the things I said to the operating committee, what can we do for our employees now? Everybody's terrified. This was in probably about May, June of 2020. They're worried about their health. They're worried about parents often, or little kids, or family members with bronchial issues, or whatever. They're worried about the streets are empty, safety. Cousins have small businesses that are collapsing. I mean, there was so much to worry about. I said, the one thing we control, Morgan Stanley, is their career. Let's guarantee that. And everybody has a job until the end of the year. We had 80,000 people. And I said, if that costs us money, whatever. It's better for their mental health. It will make them better long-term employees, and it's just the right thing to do. So you can make, as a leader, some grand gestures that sort of cover everybody, but that's very unusual. At one point, when we had a record year, I think it was 2021, we gave everybody in the organization, every single employee, a bonus. Never happened before. Why? We had all this money we created. Why would we just pay more and more and more? We already get incredibly well paid. Why don't we spread the love a little bit? Everybody participated in that record year. That affirms, they're the sort of things you can do from the top to affirm, but then it's the daily interactions that people see and feel and try, and that's how they decide if the culture actually lives.
That's fascinating. So you just said to them, until the end of the year, we're not going to fire anybody at all.
Yeah, I wrote a memo to all employees. I said, your job is safe this year, 100% safe. Do not worry about it. Whether you're coming to work or not, whether your business gets shut down or not, whether you're having a productive year or not, unless you violate, obviously, ethics.
Right, for cause.
And I got hundreds and hundreds of emails and letters from employees about that, because their partner or husband or kids or parents had just lost their job. And, it was scary. It was really scary.
It was a scary time.
It was a scary time.
So one of the things that brings up is, and we talked about this earlier today too, is this question of diversity, having diverse viewpoints, and how that actually makes an institution less risky, because it allows the institution to see things that folks who all see things the same way don't recognize. So one of the things we cover pretty closely at American Banker is the most powerful women in banking and finance, and we've had Morgan Stanley executives on that list, of course. What do we do to get more women and more underrepresented folks into the very, very top levels of banking?
You get them into the not anywhere near top levels.
So banks are
You can't,
really,
you know,
really good at that.
What?
Banks are excellent at hiring at the bottom levels, at representing their population. But as you get higher, it becomes more difficult.
I don't know. I mean, when I became CEO, 15% of our managing directors were women, and today it's 25%. The only way mathematically that happens is each incoming class has to be dramatically higher than 25% to move the needle on the 1%. We had a very small number of black managing directors, and I had a dinner with them the year I became CEO, and I said, this will not be the size of the room. It was the annual celebratory dinner for new promotes. This will not be the size of the room we'll have when I finish. And 2 weeks ago, the black MDs held a dinner for me in my honor in a huge room with a population that I think was about 6 times as large. So you can move the needle, but you don't move the needle by plucking somebody and putting them in the most senior job and just saying that will work because they're diverse.
Right.
Because if they fail, then the presumption is the system rejected them, as distinct from, no, they weren't qualified to do the job. So you've got to start, I think about talent management over a 20-year period. We had a 10-year period for this wave and succession and what it means for that. And I'm thinking of the 10 years after that, because it's somebody who is in their, early 30s who will be the CEO when they're 50.
Right.
And for that, I was CEO about 50, 51. So you needed to be, given opportunities to grow. And obviously there's one CEO job, but to be on the operating committee, the management committee, the risk committee, to be running important functions around the world in any region, any country, you need long runways. And too often we revert to the obvious, which is, oh my God, we don't have any women on this committee. Find a woman, right? It's almost that stupid. Rather than saying, looking at it in advance and thinking through what would the demographic of this committee be like if we don't change the trajectory of input of flow of candidates? It'll look like it does look today. That's not good enough. Let's do something about it. I went to our Paris office in about 2012 and met with all the managing directors and executive directors, which was about 40 people. No women.
Wow.
None. And I said to them, I will never come back to this office again until you solve this problem. And if you don't solve it, I will solve it for you, and that will be very bad for you. This is not complicated. This is not to run the Paris office. This is to find somebody who is capable, who is an executive director, which is a level below operating committee, management committee, full MDs, new MDs, executive directors, right? It's find somebody at that level who can work in France. If there are women around, we can do it.
A lot of people speak French.
Correct. So, and now it's a much more diverse, group. So it's solvable, but you have to be with intent over long periods of time.
So that's the answer. Okay. Last question. What should current managers think about? And current managers are all pretty much, boomers, Gen X, and millennials. What should they think about when working with Gen Zs and younger people coming in? How do we inculcate culture to these folks who generationally want something completely different than we wanted when we started our careers?
I'm probably not the right person to ask. I've never actually figured out the age of Gen X versus Gen Z. I have a very low tolerance for people who want to define the world around their image. Yes, there is always generational shift. I am the last person in our building wearing a tie, and I'm sure the day I'm not chairman, there'll be nobody wearing a tie. Well, actually, Ted Pick wears a tie, so maybe they will.
Maybe he only does it because you're there.
No, I don't think that's Ted. So I think you need to be attuned to the biggest issues around, work-life balance at a macro level, in office, at home, establish boundaries, but not try and recreate a firm around what, with no disrespect, a 21-year-old wants. They don't know what they want. I didn't know what I wanted at 21. And if it's not the kind of firm that they want to work for, then go and work somewhere else and see how that goes. And they might have, some things that are more friendly to whatever it is they're interested in, but with a much less good healthcare plan, for example. I mean, in any organization, there are enormous trade-offs. For some people will be motivated by the intellectual engagement, some by their colleagues, some by the perks. So I wouldn't try and customize to them. I'd engage with them. I'd talk to them. I'd ask, what is it that you're not finding about the way we manage you and the opportunities we give you that we could do better on?
Have you ever asked an analyst class that question?
Oh, all the time. I used to meet with, I stopped during COVID, but I met with all the analysts in New York. We have about 500 a year, and in New York and about 1,500 globally. And I meet with the New York ones in a large group, and I said, if you ever want to come by my office, no problem. Come up, just call my assistant, Yvette. And that year, 2 people came up. The next year I met with them and I said, I'm not arrogant about it. I don't really care, but I've got a bathroom. Don't you want to see that? I'm on the top floor in the building. The view's pretty good. Do you want to see how much security we have? Are you curious? And that year about 5 came up. And then the next year I told them the stories about the 2 previous years. And of course, within 3 or 4 years, I was getting about 400 of the 500 wanting to come up. So I stopped meeting them in my office. I started meeting them in groups of like 30 in the boardroom. And I would ask them questions like this. I would say, what is it not that we theoretically could do to change? I know you all want to work on the next Facebook IPO or something, but there isn't one right now. So what is it that we can do that we can actually have some control over and help us understand it? And I give them a little bit of tough love. I tell them something. I said, I'll tell you something your parents never told you. You're not exceptional.
Right?
How do I know? Because I look at all the MDs and they're not exceptional. And people don't change just by going up the elevator from analyst land to MD land. It's because they were never exceptional to begin with.
Right.
They have some exceptional qualities, but they have some profound weaknesses. And if you're just asking for give me more, give me more, give me more, you're not trying to do something to address the things to make you better.
Right.
And the objective, I think, in careers is to take the things you're really good at and amplify them, drive them, make them distinguishing features about your brand, your reputation, but take the things that you're really not good at, and we all have things we're not good at, and make them so they're neutral. So in those conversations, the kids would say to me, that's great, but here's something you can do for us. I'd say, terrific. And, for example, a lot of the analysts were working very hard, and they complained about that. So I had asked for the days taken off by employee for the analyst class, grouped by which group they work for. So you had certain groups, let's pretend, the energy practice had 90% of their analysts were using their full vacation. And the media practice, I'm making up the name, call it media, was at 5%. And then I sent the list to the heads of each of those practices. First as a group list, so they saw each other, and then individually with a note saying, do you think this works? Change started happening. And that was from the analysts saying to me, we're too scared to take time off. There's always another deal. We don't know if we can take time off. No, you're gonna fry. You're not gonna be any good in the job. We need you to refresh yourself and recreate yourself. And for that, we need your bosses to understand the magnitude of the problem they've created, probably unwittingly. And the way to do that is show transparency. So I think if you get in that kind of engagement with Gen Z or Gen X or Millennium or whatever, And they understand this is like a symbiotic relationship. It's not them that we're solving for. It's us we're solving for. And the last thing I would say is that the incessant desire for feedback, it's ludicrous. It's like, do some work and I'll give you some feedback. I mean, I don't know. I barely know your name. How am I going to give you feedback? So I think bringing a little bit of, I don't know if it's tough love, but practical reality into their lives is what all young people, whether it's my generation or I'm sure my generation was the same. We're no different. We're all motivated by those same basic human needs.
Great. Well, thank you so much. I really appreciate this. This has been fascinating.
Well, thank you.
Thank you so much, Hannah and James. Very memorable. And thank you to all of our speakers today for sharing your insights and your perspectives. I'd also like to thank our New York Fed colleagues that have helped facilitate today's event, especially Jessica Hall, Brendan Miller, and Jerry Sholto, as well as the members of our culture team, Tony DiCario, Stephanie Chaley, Tom Noon, Esra Ozer, and Shelley-Ann Peterson. Finally, we're grateful to all of you for attending and hope you're taking away some insights that you can bring to life in your own organizations. Thanks again.